Good morning, everyone. Good morning, good morning, good morning. I hope you are all doing well this morning. You have your coffee like I do, and you're ready to go. So this is UAN 2023 year-end update. And it is presented today by myself, Suzanne Coulter, Christopher Gatt, Robert Walter, and Alex Komorowski. And we hope we can make this, fun and interesting for you. And we hope everything goes well today. So here we go. This is the control screen. And you'll see this. And you can see there's some shortcuts to some menu functions. And you're able to submit a question over here. If you want to ask a question, they will be looked at, and then we will answer some questions at certain times during the presentation. So this is what your screen looks like. You can make it a full screen, you can minimize it, and then shortcuts to functions. And here we go. This is the agenda for today. We'll stick to it, as well as we can. So welcome and introduction right now. And you can see that lunch is from 11:30 to 12:45. Then you'll want to come back because I'm right after lunch. So make sure you're back on time. And we will try to stick to this as good as we can. So this year, it's the UAN Best Practices Game Show. So we hope that we can have a little fun while we're doing this. And I have a bunch of funny guys with me on here. They're probably better at it than I am. And we'll stick in some game show fun in between our slides. These are our game show question categories. Looks like a lot, doesn't it? Well, just relax, because it's not. We're going to go through it. There's going to be certain things that pertain to you, certain things that don't. So just relax, don't feel overwhelmed, and we will be going through all of these areas today. All right, we ask that you hold your questions until you see a question on the slide, like this. Also, keep your questions pertinent to the area that we just went over. So, don't ask a question about my introduction here way at the end. So just keep them pertinent, and we will get to all your questions. If we don't get to them today, we will try to get to them later. All right, so this is the overview. This is for 2024.1. And all of the UAN updates have an overview that describe any changes in the software or describe things that you need to be aware of for year end. Now, you will get your install, as you know, soon. And you want to get it installed as soon as possible. But you must be on version 2023.2. So you want to look right now on your computer at the bottom right, right down there, at what version you're on. So 2023.2 is what you want to be on. If you are not on that, give us a call, because we can get you out those installs. You should at least be on 2023.1, because that was end of year last year. But if you are not on 2023.2 right now, give us a call and we will get that out to you. So the overview will be installed onto your computer with other year-end documents that can be found, but they can also be found on our website under software 2024.1. You've won. You get year-end documents installed on your computer after you install it. So to find these documents, you want to go to your UAN tools area, which is on your desktop, and you want to double click that. And under that, you'll see version documentation, and you want to double click on that. Under version documentation is also the UAN support hours for the entire year 2024. Now, again, you've won, but what you've won is getting your year end done. All right, this is for libraries only. So anybody else, just relax. You've heard about this, libraries, that they are changing things on you. So you had summary codes of 100 and 200. Those can no longer be used. We are giving you a supplement that is in your version documentation to help you get through this. Now, if you have these summary codes in payroll, and you have payroll, you're using our payroll, you could complicate your year end. So you want to make sure that you read this supplement. Again, libraries only here. The supplement's going to help you. You might need to delay opening temporary mode until all of your 2023 wages are posted. That's why we want you to be aware. There could be complications with closing this year, so make sure that you're ready and read the supplement. Significant time may be required to clean up, meaning change your summary program, your summary people to the detailed code. And you can see here, these are your employees that will have to be changed, if possibly. So just make sure you're ready, relax, but you need to plan ahead. And so you want to read that supplement and be ready to go. And there it is, better plan ahead and use the year-end supplement. All right, guess what? Per normal, the IRS has dropped this on you right at the end of the year. They have dropped the threshold for e-filing. So you are required to e-file when you have combined total of W-2s, 1099 NEC, 1099 miscellaneous, or 1095 and 1094. So that's going to be most people, because most of you are going to have more than 10 just W-2s. And if you have 1099s, then for sure. So everyone is going to be required to e-file. Now, relax. We have had this in place for years, and people have used it for years, but you just need to be aware of it. So, of course, Ohio couldn't be outdone, as Bob said. They couldn't be one-upped, and Ohio has dropped the threshold to e-file, and it is 10 also. Or actually, it's not 10. They wanted to one-up them. It is all employers must file W-2s through Ohio Business Gateway. And these are due January 31st, 2024. Again, we have had the ability to do this within UAN, and you will find all of those details in your year-end procedures of how to do it. If you've been doing it, nothing has changed. All right, and there is a new Affordable Care Act filing also. So they've changed to where you need to do these things online now instead of, have a file. We do have a file for your 1095, 1094s. So this, we have created it. It does work with their system. We've tested that. So there are steps in the payroll manual for this. Most of you do not have to file 1095, 1094, so this will not affect you. But in case you do, we do have this available, but you must have a TCC code that is specific. It is specific for 1094 and 1095. So you have to apply on the IRS website. Again, only a small number of our clients actually do this. And the final thing on new things you have to be aware of is there are some new revenue codes. These are court-related settlement codes. So the Township Revenue Code is 618, and the Village Revenue Code is 404. Again, within version 2024.1, we will have links to guide you on those. LGS has put out some information on that, and one of them is the One Ohio Opioid Settlement, and the other one is, I believe, Monsanto. So just be aware that these codes are available and you need to use them in 2024 whenever you get that sort of revenue in. All right, best practices. This is a list of steps to follow in a certain order. These documents were included for you to download and look at. We created these a couple of years ago, and it is nice. It's really nice. We do not recommend that you skip around because you could generate reports with incorrect figures. Now, what that means is by date. So they could be incorrect if you print them out, if you skip around and then you generate reports before you've finished everything. So the numbers in the system aren't wrong. It's just when you're generating the reports. So don't skip around on the best practices. You're going to see these star symbols throughout today. And these are items that you can start and get ready for early. So you can gather information and get yourself going early with these items. You can take immediate action and gather outside information, organize data. So this is in the details of all of these are in the year-end procedures. So the year-end instructions, these are, the year-end procedures are the in-depth instructions for each step. So if you are using the best practices and you get to something and you're like, what the heck is that? You can get more detailed information on every step through the year-end procedures. Now, I was a geek when I was a fiscal officer, and I did that for 15 years. And I read the long version, the year-end procedures, from beginning to end every single year. I think it just helped me be mentally prepared to close the year and know all things that were possible that I could run into. So, I would sit there and watch football and read it. So it is dry, but it's important. All right, printing 1096 and 1099. So UAN has a standard layout for 1099, 1096, and it meets the IRS required guidelines. But we found that a variety of vendor forms that say they are IRS certified or IRS approved actually may not get the numbers printed in the proper area, or they'll be slightly off within the box. So it is possible that you will have to customize the layout. That is done in the entity setup area, and there are instructions within the year-end procedures that explain how to do that. Now, 1099 tax forms. If you need to send these out, you want to purchase laser printer forms, because what we give you for a printer is a laser printer. So you will want to use that type of form. The free forms from the IRS are tractor feed, and they really don't work well with the printers. So use the laser printer forms. And as you can see here, the guy did not use his forms and he lost on the big wheel. Year-end purge. Don't get surprised by this. This happens every year. When you close 2023, all of 2016 prior year data will be purged. So if you don't have printed records, you should do this before closing 2023. Again, they're in the year-end procedures for directions. Again, this is when you close the year, not when you open temporary mode. So you will want to print out any reports that you think somebody or some auditor might want to look at in the future. Okay, 2024 tax tables. The November 2023 Ohio tax table, those changes are in the version. I helped test those, so they are good to go. We have not gotten an update from the federal government yet. When we do, you will get an email issued with the download and install instructions if they change. Do not delay posting any wages in your new year, though, waiting for this email. You're going to want to go ahead and post wages even if they haven't gotten us an update. Don't worry about it. Post your wages. The updates are usually, not huge changes in the tax tables. So it really doesn't affect your employees very much. So get your wages posted, and you do not need to fix the wages you posted before doing the update for the tax tables. So just don't worry about that. Don't get all upset about it. It's usually not a big change. Okay. We have new regulations for Social Security Administration W-2 filing. We talked about that. If you have 10 or more W-2s, you're required to file them electronically. If you do not already have a login for the Social Security Administration Business Services Online, or BSO, you need to register now. Okay, so if you don't have one, you got to do that through the IRS, but you need to do it now. The UAN software, like I said before, creates the proper file that you need to upload onto their site, but you need to register. So we cannot assist you with that website or getting your BSO number or the upload process. But from what I've heard, it's not difficult. So, but feel good that the file we have created works for you. So if you haven't registered, do this as soon as possible. So on our UAN link at ohioauditor.gov, we do have training there for you. And there's a lot of good information. There's accounting and payroll housekeeping videos that can help you clean things up in your data before you get to year end that might possibly cause you trouble. So there are videos there that you can listen to, and you can find and correct all your errors. So that is it for me. Who's up next? I think it's Chris.
Yes, Suzanne, I'm up next. And Suzanne, with her chicken outfit, is going to be off to go play Let's Make a Deal, while we take a look at how to actually install your 2024.1. So if you are going to be expecting a disk and you're wondering where it is possible that they do get lost in the mail. If that happens, you can always send an email identifying your entity, of course, and verifying your mailing address. and you can do that to UAN support, and we can send you out another disk. If you are the fiscal officer of multiple entities, or you're friendly with some of your neighboring villages or townships that use UAN, all those disks are exactly the same, and so feel free to share. Even if you sign up for a disk, you can also get the download option. And to do that, again, you just need to contact us. You just have to have the sufficient internet bandwidth. And again, if one of your other entities or one of your neighbors has gotten it, they can copy what they downloaded onto a USB thumb drive, and then you could also transfer over that way. So if you're missing possibly the 2023.2 or 2024.1 when it comes out, again, just email or call us and we'll be able to either mail you out a disk or send you out the instructions for download. So when we're looking at the year end, just know you must have a DVD drive or sufficient internet bandwidth for the download. Make sure you locate the install instructions and read those. We've got them in the packet, or they are included in the information with the download. We encourage you to follow the instructions. We get a lot of questions on how to install. Like, for instance, a lot of people do ask what the password is. It is always going to be the fiscal officer, capital F, capital O, no space between the two words. And so some people are signed up to get the disks, but if you are signed up to get the download, you will get the download link. It's not like everyone's getting the disk or anything like that. So once you've gotten the disk or you've downloaded the file, what happens if it doesn't start up automatically? Well, you'll just want to go down to the taskbar and find the manila envelope, and that'll take you to your file explorer. So if you're looking for where the DVD disk drive is, you just want to go and select this PC, and that'll bring up the drives. And so just select your DVD drive and it will open up, and then you can always select the install, which is going to be your execution, the exe file. The install folder might have a date that looks old because the install portion of the program doesn't change. The information in the setup file does change. So if you're doing downloads, you would just go to your download file, find, oops, this should be, say, 2024.1, not 2023.1. We missed that. Sorry about that. And once again, just be clicking on the setup, and you'll be able to get everything installed. Now, once everything is installed and you're on 2024.1, you can, temporary mode will not open automatically. You have to actually go into the program to open it. So to do that, you'll be going to your general, maintenance, year end, to the open temporary mode. When you are opening temporary mode, this is the only time of the year where withholding names can get manually changed. So if there was a misspelling when someone entered in a new school district or a new local tax, or possibly the name of the health insurance got misspelled, the screen's going to come up. Just take a few minutes to just double check all your spellings, because this is the only chance of the year that you'll get to be able to edit through those. Hit save once you make any additions, and then this important message comes in where it'll say that UAN is now in temporary mode. This is ability to log in to the year 23 or 24. So just always double check and make sure that you're in the correct year. Once you log in, you'll notice that your work year will appear. So for people who haven't seen this, that's how you toggle between the years when you log in. So that way, if you're working in 24, you have to do something in 23, you need to log out of the computer and log in and then select the year 23. This is rare, but some of you might have new items that will need to be added. So you might be going to your appropriation accounts, your funds, or your revenue accounts to add something new. If there's a new vendor that needs to be added, you would just go to your general maintenance, down to your vendors/payee. Now, what everyone will eventually be doing is adding your 2024 budgets. So make sure that you have everything organized. This can be, for some of you who have multiple funds and multiple accounts within those funds, it can take quite a bit of time for all that data entry and organization. So with temporary mode open, even in December, you'll be able to add in your 2024 budget. So you won't have to wait for the calendar year of 24. So to do so, well, first you might need to know what your budget is. So if you don't have that financial worksheet printed out, you would go to your budget, transactions, select what your 2024 budget is. And then you want to make sure it includes the account codes, or else it's just going to print out the aggregate numbers under each fund. Then when you're actually adding in the budgets, you'll start with your revenue budget, go to your accounting, maintenance, revenue budget. You're going to click add. The first time you add a budget for any fund, you have to always add that in, because revenue budgets are only entered once. Once they've been entered, any other changes will have to be done under a supplemental budget. So on the Add Revenue Budget screen, from the drop-down, you'll select whichever one you want to work with. You don't have to do these in numerical order, anything like that. So once we bring up, in our case, the gasoline tax, we only have 2 revenue accounts in there. We put in our expected revenue for the year and enter in our January 1st effective date. Even if we're doing this in December, you always want to enter in that January 1st effective date. Now we get to a temporary appropriations. Not everyone uses them. Some people go right to the permanent appropriations. But if your board does adopt them, you want to adopt the temporary appropriations in December. Temporary appropriations are appropriations just for the first quarter. So if you don't have everything finalized for the full year, you can get your temporary appropriations in to be able to pay those bills. To add in, we're going to be going to accounting, maintenance, appropriation budgets. And once again, much like the revenue budget, we're going to hit add. But once we add in an appropriation budget, it's going to give us 2 options, the temporary and permanent. So also like the revenue, appropriation budgets can only be entered in once. So anything else is done through a supplemental. Like revenue budgets, we're going to be selecting the fund we want to work with. There are lots more appropriation accounts, as you can imagine. So then you just want to enter in all of the amounts for the fund. Now, when you're doing a fund, you need to enter it all in at once. If you enter in part of the numbers and hit save, you can't go back. You have to do a supplemental appropriations to add in anything additional. If we're doing this before January 1st, we're going to enter in a January 1st date because they were adopted in December. But if your appropriations get adopted at your January meeting, you're going to be entering the date of that meeting instead. Then you want to start looking at adding in your new purchase orders. We're going to go transaction, accounting, transactions, purchase orders. You're going to hit add or possibly duplicate. The duplicate option brings up all the purchase orders that were used the previous year. This can be a way of seeing what you had last year. You want to toggle using your types and then select the ones that you're going to be using before or again. You're going to be entering the date. So with the BC regular, enter in your issue dates and such, just hit OK. And then you can go to your purchase orders. Again, you'll be entering the dates for those. Select the ones that you want to duplicate. Make sure you're looking at the amounts. And you're going to want to hit OK. Now, if you do go through duplications, remember that's just a starting point. It's going to be using whatever numbers were on the previous year's purchase orders. And it's very possible that those numbers will need to be increased or decreased. So you'll want to go through and edit all of them and just double check that the purchase orders and blanket certificates have the amount that you're going to need for the new year. So once that's done, you're really ready to post live starting January 1st, 24th. This is what makes temporary mode awesome, because all of this can be done before the new year once you've installed and activated temporary mode. So our next presenter is Bob Walters. So Bob, come on down. You are the next presenter at the UAN year end.
Oh, wow. Great. Thanks, Chris. Man, this is a dream come true. I can't believe it. I just want to thank, say hi to my wife and kids and everyone out there. Trina Martin, if you're out there, I know you got nothing better to do on your retirement. Thanks for watching, and I hope I win a lot of cash and prizes.
All right. We are going to follow along with the year-end best practices. If you don't have that printed out, don't sweat it. You can always print it out later. It's what we emailed, or we emailed you saying it's on our website, on the homepage of our website, the training document right up front. And the whole presentation today follows along with that 8-page document in pretty much the same order that it is laid out. Gives you more details. We aren't, as Alex mentioned, I believe, we aren't providing the slideshow because the slideshows just don't, that was a thing in the past that it just doesn't show you everything. We've got little animations and goofy things on here that cover up important information, and it's not worth relying on. We will have the video out after a week or so, so that you can watch and skip through portions of this in a version of a YouTube video. So all will work out that way, but really the best practices document is your best guide. This is just to introduce you to the best practices and give you some demonstrations of that. All right, so I think we beat that drum a bit. Let's talk about this section. Again, on page 2, the new year payroll procedures. I should double check you guys are hearing me right here. It's not just, you hear me all right, Chris? Hearing me fine. Okay. All right. Don't want to make any assumptions. Using a different headset here today. So in new year payroll, well, just like with accounting, you can, while you're on the calendar date of December, you can start working on your new year payroll procedures, whatever you can get done right now. So temporary mode, like I said, is coming to you in Technicolor. And, here's the repeat of the same silly thing. Dancing with the UAN stars, just do the floss right there. Keep yourself awake through all this, and keep the blood flowing. So we will move on to the next step, which is, well, a little reminder while you were all gearing up to dance and getting your dancing shoes on, when you log in now, of course we're going through everything in a like a sequence here, in very orderly fashion. But when you're really using the best practices, you're going to come in maybe on a Monday, do some work in 2024, and then log out for the day, come in next day, maybe it's on a Wednesday, and you're going to log back in, do some 2023 work, and then work in the payroll or accounting in 2024. So you're going to be logging in and logging out, and that's specifically designed that way so that you have to decide what year am I working on. So it's really important especially when we talk about these payroll steps, that you pay attention. If you come back for a new day and you want to do some work in 2024, it will always default to the older year. So in our case, 2023 in temporary mode. And we want to change that to 2024. And we'll do, so keep that in mind, very important. So looking at the best practices, if you happen to have that out, there are actually 5 points under this, main points under the this section for payroll procedures in the new year. And I want to talk about the first two together. The first two are add any new earnings, add any new leaves, or add any new withholdings to the main software list. And the second one kind of goes along with that in some cases, is add any new earnings, any leaves, or any withholdings and assign them to individual employees. So sometimes you'll have one without the other. For instance, if you already have an employee that has deferred compensation, for instance, you have an employee that just opted in to get deferred compensation. They've been with you for a while, but they never had that plan, retirement plan with higher deferred comp. You would just skip to step 2, right? It's just you've already got deferred comp already set up. But in general, if it's a brand new item like this, earning, withholding, leave, benefit, then you're going to add that to a main list first, and then add it to the individuals that are going to have that withheld from their paychecks. So this first section here, we're going to talk about adding any new earnings and leaves. We'll break it down there and then talk about withholdings. So to add a new earning or leave, you just go to payroll, maintenance, earnings and leave, and then you're going to click on that add button to add any brand new earning or leave. Now these are new year payroll procedures. Here we are in December, and be honest with you, it's not very common thing to necessarily have to add a new earning or leave, a brand new one that you've never used before for any employee to the software. It happens, but not super common. So I think, since it's not that common, we're just going to scrap this demonstration for our purposes today and move on to another topic, which is adding new withholdings. I think that's a bit more common. We'll see that that's something that you might do for January to begin the year with. Of course, not everyone's going to do this, but if it happens, this is what often this will happen in January where you'll need this. So this is 2 parts, maybe 3 parts to setting this up. The first one is adding the withholding to your main list of withholdings that could be applied to any particular employee. So you go to payroll maintenance again, and this time you're going to select the withholding main list. And that will open the withholding area, and you can click on the add button to add any brand new withholding. Now, as I mentioned before, if this is just new to a particular employee, for instance, if you have some employees or maybe a trustee that has Social Security withheld, like in some cases we have the withholdings already set up, preset withholdings like Social Security or OPERS, and you just need to start using them for a particular employee. That would be, you wouldn't need to do anything here in the withholding list. The withholding already exists. But if it's a new withholding that you've never had withheld at your particular entity, then you're going to click on the Add button to get that first part set up before you can actually do anything with your employees. So when I click on the Add button, it opens up. This is the top half of the Add withholding form. You can see it's fairly straightforward. You got a name, process group, payee, that is the vendor that you withhold, then you pay to the vendor. And then you've got, well, you got this process group, and you might be wondering, what the heck is a process group, Bob? Well, I'm glad you asked. Process group represents an IRS designation that's going to affect how these withholdings impact your tax reports and, well, impact your employees, what's withheld in taxes as well. Do the employees get any tax benefit from this new withholding? So these 5 categories here are directly from, I believe, the IRS Circular E. We renamed them to make them a little bit simpler naming convention here, but they are directly from the IRS. And I'm going to camp out on this for a bit because it is important if you are going to be adding a new withholding in a new year. You got to get this right. So let's start with these definitions, the easiest ones first here. Here we've got, near the bottom here, we got local tax and school tax. Well, your local taxes, that's going to be city, village, township, income taxes. The school tax is obviously also a local tax, but it's in its own category on its own. So any kind of school district income tax, you're going to choose school tax for that because that'll have some unique fields you have to fill out, such as a school district number or whether your school district is one of the traditional standard state district plans or if it's an earned income school district zone. And those are taxed differently. So we need to have a separate school tax if you're going to do that. So let's move on. So right above those two is deferred compensation. And that would be for anything qualifying as a tax-deferred retirement type plan, such as with Ohio deferred compensation is always going to be that. So deferred compensation is specifically for those tax-deferred compensation plans for retirement. And notice that we named it non-Roth. And we did that several years ago when Ohio Deferred Comp decided to add to their portfolio Roth retirement plans that you can contribute to. And a Roth plan is the exact opposite, where when I say tax deferred, that means the employee will get a tax benefit. They won't have to pay quite as much in federal and state taxes. And if they have that tax withheld, it's deferred until they retire. They get taxed more when they retire, but they get the benefit now, not paying as much. So that's what that is for, and we label it non-Roth because a Roth plan, if the employee opts for that, you would not use this for a Roth plan because a Roth plan means I get taxed now. It's an after-tax or post-tax item. And for that brings us to the miscellaneous withholding. So if you have a Roth deferred compensation, you would pick that and you would name your withholding, Roth, probably Roth retirement contribution or something like that would be a good name for that. And that would give you no tax benefit right now at all. You'd be taxing the money just as normally. All right, so if you zoned out on me, I want you to pull yourself, start doing the dance or something to wake yourself up and focus in because this next point is really important. The miscellaneous withholding and the cafeteria plan. Now, miscellaneous withholding can be used for insurance premiums, your dental, your health, life, etc. That can be used for insurance premiums that are post or after tax withholdings, the type that you have no tax benefit for. So you have $100 withheld per paycheck. You're not going to get any tax deferral on that or benefit for it. We're going to get to. You can also be used for some other things like union dues or child support or garnishments. Those are all after-tax items. You're not going to get a tax benefit for that. You might be able to think of a few others, but miscellaneous is anything that provides you your withholding for the employee and provides no special tax benefit. So you would choose that. But especially important when it comes to insurance premiums withheld that have no tax benefit. And for insurance premiums, you really only you have two choices here. You have the cafeteria plan or the miscellaneous. Now, the cafeteria plan gives your employee a great tax benefit. They have all kinds of taxes. If they have some local taxes, those are deferred. And that's what's going to give you the tax benefit is a cafeteria plan, but you have to be careful. So this is where I'm saying slow down and think about it and look into it before you make a choice. It's worth the inconvenience because you don't want to get this wrong. If a cafeteria plan has two requirements for you can't just choose this on your own. It's like, oh, it's a tax benefit. I'll be the hero of the day if I provide this to our employees. Well, no, not if if you're not supposed to. So a cafeteria plan, you only choose that if it meets two requirements. Number one, that insurance plan qualifies as a 125 cafeteria plan per the IRS. The IRS has approved that. It qualifies, and you can check with your insurance agent. You want to get documentation that does qualify. You can check with a tax advisor and have them look it over to confirm that it does, in fact, in all aspects of it for what you're withholding, qualifies as a 125 plan. And number two is that it needs to be legislated at some point. Maybe there's something existing, but there should be some written, signed legislation by your board adopting this cafeteria plan. If you don't have those two things in place, it's a miscellaneous post-tax. One and not the other doesn't qualify, and it's a huge mess. If you get this wrong one way or another and find out 6 months later, it's quite a mess to clean up for you and everyone else, really. You won't be the hero in that case. So enough said about the process group. Let's do an example, and our example, I've filled out the form for us, deferred compensation non-Roth. I kind of named it that. It's a pretty direct name and the only thing it can be used for. And I've linked that already to Ohio Public Employees Deferred Comp, which I already had set up in my vendor list. Now, that's just something that at our Buckeye Township we already had set up. Well, this is new to our, we had set up because we know things here at UAN, we got to do that, but it's new to one of our employees. We've never had anyone opt for a deferred comp withholding before. Now, we get a question quite often here at UAN when setting things up, like whether it's deferred comp or some other type of withholding, where we run into a problem with that payee, where you're filling out this form. You say, well, it's 2 steps, Bob. I'm going to go add the payee, and the payee's not there. And we got our little blue minion here, our UAN blue minion. And you might be wondering, if you get stuck in that situation, why... what can I do if the payee is missing? And that's the call we get quite often. And I don't know how I'm going to pull the blue minions into our game show theme here. I guess we've won so many cash prizes here at The Price is Right and other game shows that we're able to hire just like Groot, we're able to hire an army of minions to help us out. So what can you do that is a great question, if it's missing? Well, you got to remember that withholdings need payees. They are linked to payees, and that is a first step if you never had that payee set up in UAN for any other reason. And this would be the case. Oh yeah, little guy, every withholding needs a payee, pal. goofy enough that hopefully you'll remember that. The light bulb goes on. So where do you set up the payee? And before you even go to add a new withholding, if you believe you need to add a brand new withholding to your list, you can confirm that you may have had that withholding set up in your vendor list, and maybe even did that work ahead of time, but you forgot one step. So first you can confirm that by going to General Maintenance Vendor Payees. And if you have the withholding already listed, then you want to edit that withholding, in our case, Ohio Deferred Compensation, and check the Available In setting. You need to have it, make sure it's marked for that this vendor is available in the payroll withholding form where what it means is the pick list in the payroll withholding form. So that has to be in there for you to pick that from the pick list. Now there's some, withholdings where you may also need to occasionally, like maybe with insurance, pay the employer share for insurance of the premium. And so you would also check mark accounting purchases and payments in an instance like that. Or if you ever need to pay, a processing fee through accounting, it's not a payroll withholding. There's no problem having both of those check marks checked. So if you've run into that problem, if that's not the case, and find that, you just check mark pay withholdings. If you're adding this for the first time, then the first step, it would be really a 3-step process. It'd be adding the vendor first, hitting that add button, and while you're adding it, make sure you select payroll withholdings, available in payroll withholdings. Oh yeah, and then it's so cute. They're best friends forever once that happens. Well, it doesn't happen really until you link them in the withholding. So you're adding that withholding, you've already made it available, and then you link the two under the add withholding form. So that's where we come full circle. All right, so once you've saved that, that's really the step one. Maybe there's a step A1, A, and B where you add the vendor first. Step 2 is to add it to the employee or employees that will be having it withheld from their paycheck. So we're going to go to payroll maintenance employees for that. And let me just pull that over now. All right, so there we are at payroll maintenance employees. And if you've never been there, you're just going to pick your employee from the list. When it opens up, we're going to work with Robert Bild here, our employee. You're going to click on, I'm sorry, let me back up here a little bit. You're going to click on Edit and then Advanced. And that's an option under the Edit form when you're editing an employee. And that's going to open up a separate window, this Edit Employee form. And I've got my employee at the top, Robert. And below that, I've got about 7 tab pages in this edit employee form. A lot of stuff to look at. But for this purpose, we would click on the withholding tab in the far right, and that opens up a list of this employee's customized list of withholding. So, for instance, he may have Social Security withheld from his check or OPERS, and so it's only going to show what is withheld from his check. It's not going to show what could be withheld in that list. Just a list of his particular custom withholdings. And of course, it doesn't include deferred comp. That's why we're in here. So above his custom list, we're going to click on that add button. And we click on the add button, it's going to open up a third form, which is the add employee withholding form. You see the little symbol on the right that indicates that's a new form. And on our screen, I've already filled that out. It brings up a pick list. I picked deferred compensation on Roth. It fills in the description for me and the type. And really what I need to do is fill out how much is going to be withheld from Robert's check. And in this case, it's going to be $50 for deferred compensation. So I filled that out there in the corner. Now, let me back up here once more again. This is probably the most common phone call that I've been here for about 15 years, believe it or not. And it is the most common call that we get. Probably it used to be in the top 5. It's probably down to the top 10 list because we've done a lot of demonstrations of this. But it's especially for new folks. How if you were to save it right now with $50, it'll throw a message at you, and it's really easy to breeze back that message, pass that message, and it saves the form, and it looks like everything's peachy. But then you go to do wages, and you post your wage, and hey, deferred comp was never withheld from Robert Bill's check. What happened? Well, or you get an error message at that point too. And what that message is telling you is that you missed a step. Whenever you add a new withholding to employees' custom list, you have to link it or attach it to at least one of their earnings. If they get paid for two different jobs, it's relevant to both or maybe just one of them, depending on the nature of their work. So we need to tell the software, yeah, this is a $50 withholding, but I need to withhold it when I pay him for this particular wage or wages. So I'm going to do that now. I'm going to check mark. That's how you do it. You tell the software, okay, click that earning, select it, and you've attached it to his hourly wages, and you're good to go at that point. All right, so that completes that step. We've got a couple of more things on our list here in the best practices. We'll move on to updating withholding rates. Yes, updating withholding rates is a great, well, I'm going to show you that's something that you typically might have to do at the beginning of the year as well, either for, and it might be mid-year as well, but often we have folks, a common example would be insurance or tax rate changes early in the year. Of course, you could have a tax rate change at a different time, but it's pretty common for it to start at the beginning of the year, effective date. And insurance, of course, could be renewed, in June, perhaps, for your entity. But again, it's not too uncommon for this maybe to renegotiate and start a new insurance plan or new rate for that insurance at the beginning of the year. So it's something you can take care of here in December without affecting, oh yeah, that's temporary mode, without affecting your last payroll in December. So as soon as you get that version update and open temporary mode, you could start setting your rate for 2024, and you might still have a payroll for December 23 as long as you're logged in here in temp mode. And you can always look at that right-hand corner of the screen and see the working year. That little picture there is what it will look like in the right-hand corner during temporary mode. It's going to say working year 24 or 23. So as long as you log in to 24, you're not going to affect your rate change for your last payroll in 2023. So you can knock that out right now. All right, so this is a two-step process. And first, you're going to update the main list again. Can't update the employee's particular information until you update the main list. So update the main withholding list, and then update each employee's withholding that it's assigned to the employee. So that may seem like a whole lot of work to you folks who are, have 50 or more employees, but we've got a nice, sweet little shortcut coming up that makes step 2 very easy. And we'll get to that, but first things first, we're going to start with step 1, which is adding it to the withholding list. So again, you go to Payroll, Maintenance, Withholdings to get that withholding list. In our example, we're using Buckeye Village income tax. The rate's going up effective in their first payroll in January. So we'll check mark Buckeye Village income tax. It opens up an Edit Employee and click on Edit. And it opens up an edit withholding form for a local tax like that. We can look down at the bottom of the form, and it shows us the current rate, which is 1% for 2023 at Buckeye Village. But yeah, that is going to change in 2024 to 1.5%. So we can type in the 1.5 as long as we're logged into the working year 2024. No harm, no foul. It's only benefit. We'll type it in right now. We'll save that, and we can move on to the next step and use this awesome shortcut called the Withholding Editor. So Withholding Editor, we're going to update all the withholdings assigned to the employees for this particular village income tax. So we go to Payroll Maintenance. It's right at the bottom there, Withholding Editor. And it's going to open up a form just like this, and you go to your pick list and choose your, we're going to choose Buckeye Village income tax, pick that from the list. It shows me all of my employees that have the Buckeye Village income tax attached to their earnings, at least one of their earnings, which should be all of their earnings for this local tax. And we can see that it's set to the value that it always has been on at 1%. But we can change that. We first have to select all the employees, all of them are affected in this case. And then we go to the center of the screen where it says change to, and there I've typed in the rate of 1.5%. And when we click on that save button, it's hocus pocus, and here we go, 1.5%. We have 100 employees, all of them have been updated in that one step. So much easier than going to each employee and editing and clicking several buttons and checkboxes to make that change. All right, so that's a great tool here. Sticking with the game show theme, well, we've got, you can choose, if you look on page 2, we've got 2 more sections to complete in the payroll New Year procedures. And well, let's make a deal. You can choose curtain number 1 or curtain number 2. All right, I hear you out there. You've chosen curtain number 1. Let's see what great prizes we might have, or is it a dud? Oh, no, you chose wisely. Curtain number 1 is the Skip Calendar Editor. Fantastic. That is another great shortcut where you can update with your withholdings that you skip on certain paychecks. Now, if you've never used a skip, well, let me point this next point out here. This only works for employee withholdings that have a skip option already active. So if you've never done that before, or you're not familiar with just the skip option, we can't get into the nuts and bolts of that here in this demonstration. It would just take too long, too many screens to look at. But you can feel free to, as we go through this demonstration of using this shortcut for the skip deduction, the skip calendar editor, if you think this is something that may be beneficial for your entity, then please give you a phone call. And any support representative would be happy to help you get it set up at the employee level. You have to do that first before the shortcut can work. Just like you have to have a withholding set up for the withholding editor, for the skip calendars editor, if you have to set up the skip feature per withholding, which can take a bit of time if you've got a lot of employees, but it's well worth it because after that initial setup, it saves you a lot of time over the years. As the calendar up, you only have to do it once a year. It's kind of a set it and forget it kind of thing. And then you get, the winnings every year. Just once a year, you have a calendar change, of course, and you've got to, you can use this shortcut to quickly change it for all of those employees that have a skip deduction set up. Again, if you're not familiar with that, as we go through, you maybe have a better, we'll explain it a little bit more. But before we look at the actual tool, the skip calendar editor, we need to look at our 2024 pay schedule because we need to kind of flesh out what exactly do we need to skip. So I'm going to give you an example of that, and I encourage you all to lay this out in an Excel spreadsheet for yourself. Even if you don't have any skip deductions, it's a great practice to really kind of see the whole year and make some notes for yourself about any special situations for the year. So let me explain what I'm doing here. And I'm going to do this at our Buckeye entity for all of our different frequencies. So I'm only going to show you the bi-weekly frequency example, but you could do this for monthly, and obviously monthly would be, you'll see, would be very easy since it's I'll explain the columns here first. So our first two columns is the pay period. So I've got my starting date and my ending dates for all of my pay periods laid out on a spreadsheet for an entire 2024. And then I've got the pay date also just right next to that. So when you look at the first one, my first pay date is January 5th of 2024, but that's for the pay period covering the time that our employees worked for in our biweekly schedule, December 9th to December 22nd. So we've laid that out so that we can see how all the chips fall, so to speak, with that. Notice that I've highlighted a few sections. I've got the pay period months and the pay period and the 3 paycheck months, I'm sorry, and the 3 pay period months are highlighted in green and peach there. So I can see them very clearly. And in our example, we're doing this because our insurance at our township is deducted twice a month for our employees. And with a biweekly schedule, well, that could potentially cause a problem. Now, for those of you who are kind of new to UAN, I know we've got still quite a bit of turnover in this past year for a lot of townships and villages and new UAN clients. And so just to clarify, when in UAN terms, when we talk about biweekly frequency versus the semi-monthly frequency, there is a difference. So when we refer to the semi-monthly frequency, that's a very specific frequency where employees are paid twice a month, no matter what. Let's say maybe on the 15th and the 30th or the last day of the month, their period covers that range, the 1st to the 15th, and then 16th through the end of the month. So it's not exactly a 14-day period. It's just twice a month. That would be semi-monthly. What we're looking at here is a bi-weekly pay schedule, in which it counts off 14 days, and that's the pay period that it's covered. So when you've got a 14-day period, well, you know, in the reality, we have a calendar that's 365 days. So it's you're going to have 26 pay periods a year, versus with semi-monthly, you're going to have 24. So with biweekly, you're going to always have a 3 paycheck month. Our calendar at Buckeye Township happens to fall on March and August in 2024. This is, I got to emphasize this, this is only an example. It's not a standard biweekly schedule. There's no standard. Wherever your dates fall, they fall. So, I mean, in the real world here at UAN at Otter State, I'm on a pay schedule, and we happen to have 3 paychecks in December. Kind of nice for Christmas shopping, right? It just happens to fall that way for the Otter State's office. At Buckeye, it falls on March and August. Yours could fall in a completely different schedule in different months where you have those 3 paychecks. So don't take this as some kind of golden rule. It's not. But as an example, you are going to have for biweekly 3 paycheck months. And for Buckeye Township, we have our insurance, all of our insurance is deducted twice a month. Let's say it's $100 for simplicity on each paycheck for our biweekly employees. So that's $200 a month. Well, that creates a problem if you have deducted from every paycheck, because that third paycheck, if we're not really paying attention, it's going to be withheld a third time, and we're going to withhold from our employee if we're not paying attention, and overpay the insurance company by an extra $100 in both of those months per employee. That's kind of a messy thing to clean up if you make that mistake. So we've got a great feature that you can set it up once a year to avoid mistakes like that. That's what we're going to show you with the skip deduction calendar. Now, while we're in here, I'll just show you on this pay schedule, you could use this for other options. there's a little arrows saying, yeah, we're going to mark for the third paycheck, we're going to skip those dates. And also, you could add other helpful reminders on this pay schedule. So, here's one example. At our July 4th falls on a Thursday next year, and our board happens to meet on the first Thursday of every month for their meeting. And so we just made a note that they want to blow off some fireworks on July 4th and be with their family there. So we made a note here that we can, use this as a reminder to set dates and maybe an alternate meeting date for them. So use it for other things as well. Let's turn back to our skip calendar, and let's see if this looks like this slide is not working the way I want it to. It should show you how to get to that, so I'll just tell you. And it's also in the bottom of page 2. To get to the skip calendar, you just go to Payroll, Maintenance, and then the last thing on your list is the skip calendar editor. All right, and so that will open up this form, the skip, which is it'll list all of your skip calendars. Now I want to say the first time, if you or a previous fiscal officer has never set up a skip calendar in this list before, when you open this area up for the first time, and again, it's Payroll, Maintenance, Skip Calendar Editor. When you open up this area, there'll be just one row of information, and that is going to be, let me see if I can, it's not going to let me show you that without the arrow in front of it. But the row down there that says deduct from every pay period, that's going to be the only thing in your list. And that it really does nothing. You can click on and edit it. There's no way to make edits to it. That's just pointing out the obvious that if you set up withholding, it's going to be deducted from every time you pay that employee. So that's your baseline. And then you can set up a skip calendar, other skip calendars for different situations. In our case, we just have one, which is which we've named. So notice it's named something very meaningful. And we recommend you our previous fiscal officer, when they set it up years ago, they named it something. You really can't miss this. We'll select it here, the biweekly skip third paycheck. So it's hard to miss the meaning of that. What's the purpose of that skip calendar, biweekly skip third paycheck? So that I just want you to know that's not an automatic thing. You could name this, The Price is Right if you wanted to, but it's not going to be very helpful to you later when you're looking back. You want to name it something very meaningful. Then so we already have that. And each year we're going to do a little bit of work, just a little bit of work once a year to get it updated. So I'm going to click on Edit, and that's going to open up the Edit Skip Calendar form. Is going to show me, since I'm logged in to work year 2024, it's going to show me next year's calendar. And going into this the first time, nothing's going to be selected. Now, if I forgot to log into 2024 and I was in 23, the old year, then it's going to show me, if I've been using it, it's going to show me the dates that have already been selected. I've been using, I've used the calendar all throughout the year. And you want to jump out and quickly go back into the proper work year to get this set up. All right, so how does this work? Well, we're going to select the dates that we want to skip. So that's going to affect two paychecks. So sure, I'll go ahead and select the date and the March, the third pay. Whoa, wait a minute. Holy cow. Yeah, I've got another assistant from our Wendings here. Once again, we've got lots of assistants at UAN. And he's saying, wait a minute, you're about to skip the wrong paycheck. What do you mean, little guy? This is the third paycheck of the month in March. I'm not exactly, well, I should read the directions. Well, that's always a good idea, Bob. Yes, I'll read the directions, and it says right there, select any date within each pay period that the withholding should skip. Select any, well, I'm not sure exactly okay, yeah, am I not doing that? Oh, well, let's look at our skip calendar here. He's going to show me on the skip calendar, I'm sorry, the pay schedule, what exactly does he mean? Okay, yes, skip. So it says March 20, that's my third paycheck for March. But, oh, yeah, that's right. In the directions, it says select the pay period that you want to skip. So apparently, this whole skip calendar is programmed to function by pay periods. So my third paycheck is March 29th, but if I want the insurance, in this case, to be skipped over and not deducted on March 29th, I have to select a date within the pay period that ends March 15th. Tricky. So, wow, that's a good reminder. Thanks, Guy. You can go away now. Thank you. We'll go into the next slide. Nope, go away. All right. So we're back on to the skip calendar editor. And yeah, all right, I'll do that. So looking at the directions, it says select the pay period, which would be March 15th for the third paycheck, the pay period. And then for the third check pay period in August, it's going to be August, August 16th, pay period ending for the paycheck in August 30th in our situation. Click on the Save button, and it saves the record. Now, I want to point out, since I've been using the yellow highlighter on your screen, that's, of course, just our little markup here for your demonstration. But on the calendar itself, it really does highlight, when you select a date, it'll highlight it in yellow. And those are the pay period, corresponding to the pay period you selected, the dates that will be skipped. So we'll click on the Close button, and that'll bring up an important message about applying, but I'm going to demonstrate that. So we're going to just click OK to that. And it's going to bring us back to the list. And it's kind of nice, I think, that it lists the skip selected. So we can see at a glance, oh yeah, I've got 2 skip dates selected on this biweekly paycheck. But what that message was talking about was that you're not finished yet. You just kind of set up the calendar, but your next step is to tell the software what withholdings this needs to be applied to, because it's not going to automatically apply it to all of your withholdings. There might be cases where you've got a biweekly, there might be some cases where you would not want this applied. So we have to have one more step. We're going to select our skip calendar, and then we're going to click on right next to the Edit button, the Apply button, and that'll open up the Apply skip calendar form. And from there, we're going to go to our frequency pick list. We're going to do one frequency at a time, and that will narrow down our list of withholdings. So biweekly, and then it's going to show me all of the withholdings that have, under our biweekly frequency, all of the withholdings assigned to employees that have a skip deduction set up already. So again, if you have a new employee, they have in a withholding that needs to be skipped, but you haven't set up a skip deduction, it's not going to show up in this shortcut list. You have to, that's just a one-time initial setup process for that employee. So again, call UAN about that. But we've got, in our example, this should be applied to all dental, health, and life insurance. We'll just do our example with dental insurance. So we'll select that. And then we've got all the employees that have a dental insurance and they have a skip deduction option active for their biweekly. And so we can select all of our employees on that list and click on the Save button. And that is going to save our changes, and it applies, what it does is it applies that calendar to all of those in one step. So again, if you have 50 employees, it just did all of that, set up those calendars for all those employees. Easy peasy. We just go through and keep picking the withholdings, the life insurance, health insurance, and apply it to all of them. It's a great shortcut that if you need this feature, it's so much faster than using editing the withholdings directly. All right, so that brings us to the last point on our list. Well, you selected current number 1, and that brought on a great prize for you under current number 1. But you have an opportunity to win. Yes, an all expense paid vacation to UAN Island. That's right. That's the next thing in our game show package. And in UAN Island, you get the benefit of adjusting New Year leave adjustments. Well, all right, not that exciting of a exotic vacation trip, but it is important, and it can be something that you can do. You want to at least start thinking about it now. Notice that the term in the best practices says evaluate leave balance. It doesn't say automatically adjust. Now in our sunny skies here, we say on our screen here says New Year leave adjustments. Maybe. You have to think about whether your employees, whether it's time to adjust for your employees or not. And, oh, you might have employees here like Bernice. We've got employees at Buckeye Township who would really like to take some of her cash winnings in the game show and spend it on a whole week on UAN Island, but she's not sure if she's just going to be able to take a day or two. And so we need to oh, there she goes on her way to UAN Island. But we need to evaluate our leave balances to see if Bernice or other employees are due, how much they have left for the year if she wants to take that vacation at the end of the year. And so we want to look at our leave detail report, which you can find under reports and statements, leave reports. And we want to look at the year-to-date report for leave detail and see where our employees stand right now going into the end of the year, and look at our policies and figure out whether we are ready to do any adjustments. Now you need to determine if or when to do an adjustment. Now not everyone has to do, and some of you may have no adjustments to do at all because of the nature of your leave benefits. If maybe you don't have any leave benefits, so you can zone out at this point. But if some of your employees have any type of leave benefit, we're talking vacation, sick leave, personal leave, what other types of leave? Yeah, personal leave. You could have bereavement leave. That would be like a incidental thing. So any kind of, usually we're talking vacation or comp time, perhaps balances. So now you want to. Some governments don't have any need for an adjustment because their employees, or maybe certain benefits like sick leave, accrue a little bit each paycheck. And so there's no need to adjust at one time in the year. They can just, they have an ongoing accrual. In that case, you're just evaluating the leave detail report for errors that might have occurred throughout the year to see if you make any adjustment corrections. But there are many local governments that have a once a year leave lump sum adjustment that they have to do that is due to their employees. And so we want to look at that and see and make sure we are following our, oh, there goes Bernice. Yeah, well, we'll have to fish her out a little bit later. And hopefully we'll be able to get her on UAN Island for a while. But we need to evaluate the reason I'm spending some time on this is because we need to look at your policies. This is not a statewide, dictate as far as what your policies go for sick leave and vacation leave for all your leave benefits. It can vary by village to village, township to township. Now for libraries and maybe some special districts, maybe there's some outside rules. I cannot speak to that, but assuming for many local governments, this is driven by your policies. UAN does not determine your policies is the point, and we cannot. If you ask us, hey, what should I set up here? That is not our choice or a privilege to tell you how that should be set up. So you should have a policy stated somewhere in writing, ideally in an employee handbook of some sort. Now, if you don't have a written policy, if your board doesn't have a written policy somewhere, at least in the minutes legislated somewhere, then I really strongly advise you that you make that in this upcoming year, make that an issue with your board. You can bring that up, that is part of the dialogue between you and your board, that because this needs to be consistent. If you have an employee that's getting a benefit that's in the same job category, and you just don't want to go by, hey, the board says, yeah, give that guy an extra week of vacation. Well, all right, well, someone else may be in the same position as them and they didn't get that extra week of vacation. That's not, you want to be consistent, and you want to have a clear and consistent policy for your employees in writing that could come back to haunt you if you don't. So that is something to pursue. And if you may have that, if you're newer, you need to locate it, either buried in some paperwork or some minutes, and review that. And this relates to the dates in which, so if you're in a situation we have lump sum leave amount, where say an employee gets a large amount, like 2 weeks of leave or 3 weeks of leave at a particular date, then you need to find out exactly what that policy is. And that way you know. So you may not actually be doing any adjustments now. You may have to wait until sometime next year. All right, so once you know your policy, then you've got those clear vision for your employees, and they can be like Bernice here. They can know exactly what to expect for their leave, and hopefully she can take a week off here in UAN Ireland. Hopefully we can all join her there sometime soon. So let's actually get into the nuts and bolts of how do you do a leave adjustment if you need to do one now or later for your employees. And that's under Payroll Utilities Leave Balance Adjustments. That'll open up a warning message. Supporting documentation should be retained for all leave balance adjustments. Well, this is important because, this is cash money, people. You got to be careful. This is like taking or giving away money. When you say I'm going to give someone 8 hours of leave, you're saying you're going to get paid at some point for not working for 8 hours. So that's like money, and the auditors will closely scrutinize it. Or if you take it away, and the employee says, "Hey, wait a minute, why do you take that away?" And you don't have a good reason to justify that. Well, there could be a findings and recovery for you and the board that's going to affect you in the future in audit if you don't get this right. So be careful and don't make any adjustment until you're absolutely certain that this leave money, so to speak, is going to be granted or taken away for any particular employee. Once you're sure, you can hit that OK button, and it'll open up the New Year Leave Adjustments form. And there are 2 ways to make an adjustment. Yep. I'm going to show you the 2 ways to make an adjustment. And that'll narrow it in on that, zoom in on that. You can adjust by employee, so each individual employee, pick them one at a time, or you can adjust by the leave benefits, vacation, personal, whatever it is. We're going to start off with adjusting by employee, and we'll look at both of them. So I'm going to pick my employee from the list. It'll list all your employees that have leave benefits, and in our example, we picked our fire chief, Henry Hero. And as you can see, when I pick him, it shows all of his leave benefits that are assigned to his earnings. And I've kind of zoomed in on the screen here so we can't see all the right side of this form, but if you look on the right, it's showing his current leave balance. So he's got an ongoing balance for sick and vacation leave, and then there's an adjustment field. And this is really, by employee is a great way to, if you have just a few employees, you can kind of look at the big picture all at once and make all of your adjustments in one step if you need to make more than one. So that's a good option for you who only have a few employees with this benefit. Type of adjustments you might make would be, like I mentioned before, an annual lump sum increases. Let's say, with Henry, he gets maybe 3 weeks, which would be 120 hours of vacation leave and he might get that. And your policies should state, follow your policies, not the UAN example. Your policies of when your employees are due that lump sum benefit. In some cases, it might be by the employee's hiring date, their hire anniversary date. So it has nothing to do with the beginning of the year, perhaps. Could be in the middle of the year. In a lot of cases, sometimes your policies might state, if they do state that at a certain time at the beginning of the year, all employees in this category get so much leave, then that's when you would do it. So evaluate and plan for it. And maybe that's something you can do in temporary mode after your last payroll for the year. But you want to wait, as it says in the last bullet point on page 2, the very last thing, it says that you do want to complete this step and wait to do it until all payrolls are posted in 2023. So you're looking at reports now. Maybe by early December, mid-December, you've got all your payrolls done. Well, after that, you can make your leave balance adjustment if your policies support that action, right? So here's one example. And another example might be just making an adjustment for an error. So it can be a negative adjustment. Maybe there are many types of mistakes can occur, and maybe through a series of errors early in the year, Henry points out, hey, I should have another 6.2 hours, and you confirm that's true. So you would add that to the current balance. It's not a revision; it's an increase or decrease, and that would reduce his balance. The 120 would increase the balance. All right, so that's by employee. The more common way to work with this form is by the leave benefit itself when you have many employees with that same benefit. So we're going to flip to that now. Adjusting by leave type, and our examples are we're going to use personal leave for Buckeye Township. So we're going to pick personal leave from the pick list, and it's going to show us all of the employees in our government that have personal leave assigned to them, and just the personal leave. That's it for all those employees, and we could adjust them all at once. Now let's talk about our example for Buckeye Township. For personal leave, we have just at Buckeye, just an example, a use it or lose it policy. Our employees get 3 days a year, but if they haven't used that 3 days, 24 hours by the end of the year, then they lose it. They can't carry it over to the new year. That's just happens to be our policy, and we've confirmed that. And so we're looking at this list. Here we are in mid-December, and we see that everyone's used their leave. Or we can look at the leave detail report to see the same thing, except for poor Barry deceased. Not only does he have a very unfortunate name, but he has 8 hours that he has not used. If he doesn't use that we're going to have to adjust it to 0, and he's going to lose it. However, and you can make your notes here, right? So while you're doing that, you need to back it up, right? You're going to make your notes, 2020, something like this. 2023 unused personal leave lost per policy. So just refer to the policy, put in a meaningful note here. Your auditors will say, okay, I need to go look at the policy. This is why they did the adjustment. But you got to be careful. You don't want to miss the mark here. Again, findings and recovery is a possibility if you make a mistake. Check your policies. And I said, well, we checked our policies, but did we? We got to dust off that old employee handbook and take a look before we hit that post button. We don't want to take this away from Barry. He might not notice it. And then we discovered an audit 2 years later that we actually did not follow the policy exactly, and he's due that 8 hours. So we're going to look up our policy in our UAN handbook. Let me brush that off here, and let me emphasize this is only our example, but here at UAN and Buckeye Township, what our particular policy states is that for our personal leave, the employee has the opportunity to use those 3 days up until the pay period of the last pay period of the year. So, well, let me restate that. The last paycheck that covers the pay period ending date of the year that we're the fiscal year. And so in our example, his last paycheck that includes a pay period ending date occurs on January 5th of 2024. So we're in the middle of December, or the beginning or the middle of December. We still have another payroll at Buckeye Township. This is for a biweekly schedule. And theoretically, Barry could use those 8 hours later in the month. So if we adjust it now and just kind of jump the gun here that's why in the best practices says, wait till all your payroll is done. And it also says, follow your policies. So we really can adjust his paycheck now. We'll need to wait until, we can still be in temporary mode, right, and everything, working on our cleaning up our end of year. But in temporary mode, when we pay that last January 5th paycheck, and let's pretend, just for this example, that we've moved forward in time, and now it's January. We've paid our January 5th payroll in our Buckeye Township example. And so we take a look at our leave detail report or our just leave form like we have here, and we say that, our assistant paid our payroll. Our payroll assistant did that in January. And in fact, Barry did take a day off. He joined us. In fact, I should know that. He joined me in Buckeye Island for a few rounds of golf. We were using the driver there to just shoot the balls out there into the ocean for that tiny little island. But he took that day. We're glad we gave him a call and let him know that he still had a day left and there was still a chance on that last 2 weeks to take a little bit of time off. So be careful. Check your policies. See, that's why it says evaluate, and adjust at the proper time. All right, nothing to do there with that adjustment. But what we can do, since it is in our theoretical time travel here, it is January. We can, per our Buckeye Township, grant them, now that it's January, we can grant all of our employees that 24 hours or the 3 days of new personal leave that they have for the new year. And we can do that and type in click the right button here. Yes, type in a meaningful note for that. Our guy should have put in January 5th there, but that's all right. Forgive us for that. But we'll put in that per our policy. And now we've got our notes for audit to back it up, and we can post that, and we're good for the year. All right. So without further ado, let's move on to our next section. And that's, I believe Chris is covering that. Chris, Chris is in one of those squares, one of the celebrity squares, UAN squares going on. And I think you need to stop doing that dance. All right. I mean, I know I emphasize doing the what is it? The flossing dance, but man, it's time to settle down and get with your next demo. So let me pass the baton to Chris. Step out of your square.
Okay, I think I'm done with that dancing. Plenty of exercise today. Unfortunately, I didn't wear my Fitbit, so all those steps are not going to count. I hate when I do that. So we are going to take a look at the steps to close fiscal year 2023. Now, it's very important that this has to be done once we get into the calendar year of 24. So you can't close 23 until 23 is actually physically left. Now, there's also no award for filing first. You're not going to get to your Showcase Showdown any faster. Now, 2023, though, does have to be closed by February 29th this year. It's a leap year. So that should be easy to mark on the calendar. Close 23 by February 29th. To close 23, there's a few things that you want to make sure are done. You want to make sure that all transactions that need to be posted in 23 are in fact posted. Even if you're in calendar of 24, you can still be using temporary mode to log back into 23 to make sure everything is posted when it needs to be posted. You want to complete all of those 23 transactions in the work year of 2023. Once you close the year, of course, you can't go back in and break it open. Now, while you're doing this, you don't want to be posting things that actually happened in 24 back in 23. So whatever year the item was paid on or receipt on is the year that you're going to be logged in. While doing all of this, because we all know during the year end, there's a lot more on your plate, you don't want to forget doing all your normal monthly December fourth quarter objects, like your state tax, your school, local, the ODJFS, and your federal 941. So during all of this, you're going to be also verifying your carryover withholdings. And all this is withholdings that happened in the calendar year of 23 that aren't actually going to get paid until 24. So once your payroll for 23 is all done, you can see what your carryover withholdings are by going to your payroll reports and statements and down to your withholding reports. Now, when looking at your withholding reports, you want to make sure that you're using the original post date for everything except for OPRs and OP&F. Now, when you run those reports, you want to make sure that it's looking at pay period end date, since the OPRs and OP&F go off of pay period and not pay dates. So again, carryover withholdings are just simply unpaid withholdings that are going to get paid in the next year. When you run a 23 report, those withholdings are always going to be marked as unpaid and carried over, because as of December 31st of 23, they will have been unpaid, but just paid in 24. So don't worry when you run reports in 23 and it shows all this stuff unpaid that you've already paid because it's January 30th. Just realize when the report is being run from, and that because that's the information those reports are based off of. Also, when you're in 2024 and paying them, the employee shares are what is using your carryover encumbered, because those withholdings are encumbered at the time of the paycheck. Now, your employer shares, though, are going to be using your new 2024 appropriations because you don't encumber the employer shares until the withholding payments. There will be some that will need to do a cleared unpaid withholding. This is not common, but all this is going to be able to do is help it get rid of the information on things that are already paid. So if you're going to pay them in the new year, don't clear them, because then you won't have anything to, there won't be any carryover withholdings if you clear them. You're only going to clear withholdings that will never need to get paid from payroll after December 31st, 2023. In addition to knowing what withholdings are carrying over, you're going to want to know what purchase order and blanket certificates are carrying over. So you're going to want to look at the ones you have left over in 23 and close or reduce the ones that you're not going to need. So we're going to start by looking at your accounting utilities, purchase order utility. And here we can use your status to go and do all your zero balances. So any purchase order or blanket certificates that were used up but are still open, you can select zero balances to be able to see all of those. You'll be able to just select them all and close item on that. It'll get them off of your lists and make things easier. You'll just enter in the day, your close date, and then click OK to get all those closed, and so you don't have to worry about it. This will limit your list, so then I'm just looking over the items that I have left, and in this case, I know that I can select and click adjust because on one of my purchase orders that I know is going to be carried over, I actually don't need the full amount. So a lot of times you'll get your final bill and you'll realize that the bill will be paid in 24 based off of your 23 encumbrances. You just want to carry over what that exact amount is going to be. And in our instance, we were thinking it was originally going to be $1,650, but thank goodness it's coming in well under at $450. So we're just going to get rid of the remainder, so that way our revised amount is just what we need. Always enter in your purpose, always use your date. It might be December 31st, and then always get rid of whatever is not needed to carry over. So you may have to wait until you get some final statements or invoices. And then once the PO is used in 24, you're going to see it become a reserved amount in 23. So that way you'll at least know that, yes, it's been used the following year, even when you're going through 23 items and just double checking everything. Verifying your W-2 and W-3 information. This you can start doing now. You don't have to wait for your 2024.1 update. Well, let's see. So you want to take a look at your employee names, addresses, and social security numbers just to make sure that everything's going to be accurate on their W-2. So to go over these, just go to your payroll, maintenance, employees, and here is where you can select them and be able to take a look. Now, of course, their name, addresses, and social security number. The addresses are going to be the things that are most likely to change, so you don't want to be out there playing where in the world is Carmen Sandiego trying to figure out where to mail those W-2s at to your employees. Just go ahead and get all that stuff verified now and not have to worry about it. You're also going to want to verify your local school withholdings, the W-2 IDs specifically on those. So if we go to your payroll, maintenance, withholdings, there's a column that says W-2 ID. So this is just what that tax is going to look like on the W-2. And in our case, we've got 2 cities and 2 school districts. Now, depending on how you've abbreviated this, your employees might not necessarily immediately know what you're talking about. And if they don't know what's on the W-2, they're calling you asking. So you just want to make sure that this is as clarified as possible. So if anything does need edited, if it's a school district, you'll just select, hit edit. The school district numbers are, of course, defined by the Ohio Department of Taxation, I think. And you can always use the question mark here and click it to be able to double check. And that'll give you the complete list of all the school district numbers all around Ohio. So if you need changes, that's how you'll do it. Now, it's the villages that more than likely would need change, because this, you're just putting in whatever you think is right. So, for instance, if I just decided that this was going to be BVIT as my abbreviation, which of course stands for the Buckeye Village Income Tax, makes perfect sense to me. But the employees of Buckeye Township might not quite realize what I'm talking about, and so that's why I'm just going to spell out Buckeye instead. You'll want to verify your entity tax information. This is, again, something that can be done right now. And very simply, you're just going to your general maintenance entity setup and just taking a look at make sure the Ohio tax ID, your federal tax IDs are correct. Obviously here, these look like placeholders, so we would need to put something in. This is especially going to be important because, as we know, each year more and more entities are being required to electronically file all those W-2s. So you want to make sure that these are accurate so that they get put into those files and are electronically filed accurately, and it doesn't bounce back. You also want to take a look at verifying your vendor 1099 information. Now, again, our little assistants, as Bob mentioned, we got hundreds of these little assistants. We need to get more of these guys on phones, though, instead of just yelling at me to use filters. So in this case, we want to take a look at which vendors we still have marked as W-9 needed. So we go ahead and use the filters. Only one of them comes up. So we just collect and select, because we know we need to contact them to get their W-9. And then when they get that W-9 to us, we just come in here and edit it. So now it says the 1099 is required, and we've got the tax ID number that comes off of their W-9. You'll also just, again, verifying your accounts, because vendors move a lot more probably than your employees. So you always want to be able to double check on your vendors to make sure that you're being able to mail the 1099s out them and not having Carmen Sandiego come and borrow them. There's a W-2 report that you might be aware of. It's under the Payroll Reports and Statements, Tax Reports Federal. Then you just use the drop down to select your W-2 report. It's used to help verify the information on the W-2s. So just select all the employees, click print. So when you're finally ready to add and print W-2s, you should have already verified all your employee information, posted and distributed all your wages that will have a post date of 23. You want to make sure you reported and paid all those December and fourth quarter taxes, and reviewed your W-2 report and verify that all the 23 reported taxes agree with the W-2 report. So the 23 W-2s and W-3s, they can be added, edited, and printed from either your work year. So before you close out of 23, you can log into there, or after 23 has been closed, you'll still have full access to them in working year 24. When printing, each person will, of course, receive the W-2 notice. When you're adding W-2s, you'll just click on Add. You're going to get a nice little system message, which says, of course, that you can only add one W-2 per employee. And then if anything does need edited, you'll be able to edit them or delete them if necessary. We'll be getting to that editing of them momentarily. So once we've got everything added, we want to make sure that we understand how these W-2s work, or at least how some of the information goes. So whenever you see this blue question mark, it's always a good idea to click on it for more information. And so this right here is just reminding us that the W-2 reports items withheld, not amounts remitted. So the W-2 wages, they can typically differ from what your gross wages are for many reasons. So this is always a nice thing to kind of read about and remind. It's, again, you might get questions from your employees on why there are different taxable amounts under different areas. Like, for instance, your federal, Ohio, and school income taxes. Those aren't going to be including your non-tax earnings, your fringe benefits, and it's going to be reduced by your salary reductions, your cafe payments, and your deferred comps. But that, of course, works differently than your taxable Medicare, Social Security, and your local income taxes, because those only exclude the fringe benefits of OPRs and OP and F, and are only reduced by cafeteria plans. So it's also normal and correct that your OPRs and OP amounts reported on the W-2 will differ from the totals reported to OPRs and OP and F for the year. And this, again, is because the W-2 is going to be based off of the pay dates, when the OPRs and OP and F reports are based off of your pay periods. So when adding a W-2, so these W-2s have been added, so we just want to select and click Save. That'll get them all there. Now, editing W-2s. This is rare, but should you be required to, it could be, because you've converted to UAN payroll this year and you didn't post those conversion wages, so they just need to be added into the W-2 now at the end of the year. There could have been some errors in the payroll posting that could require manual edits. You might be required to add additional information in box 12 or box 14, like for instance, third-party sick pay. Now, there's over 2,000 entities out there that use UAN, so we don't know which of you are required to use box 12 and box 14, or which of you have third-party sick pay. So some of you people are out there are Jeopardy fans, some of you like Wheel of Fortune, and then there are those out there that enjoy Let's Make a Deal. You're all different, and so you're just going to have to look at possibly what happened last year, or look under the requirements on what goes into a box 12 or box 14 to see if any of those items include what you've been doing through the past year. So if you want to edit, you can use the W-2 editor. Or in this case, we're going to take a look at editing just a single W-2. So we're going to edit Steve Friendly and click Edit. System message is going to come up that telling you that in each section there's an override section that you have to hit the radial button next to it to be able to edit it by putting something in that override section. As you'll see here, we've circled in red the different areas here. So if you do need to, for instance, edit that box 13 area, you would want to select the box 13 override, and then that over column will become typable and you'll be able to put in information there. There are tabs at the top which will get you over to your state and your box 12, which are going to look like this. You might end up having to override the state, especially if you're one of our entities who lives near the Ohio border and has employees who live in one of our neighboring states. And in that case, whatever's been withheld in taxes for those neighboring states, you'll want to be able to include up here and include those employers, your employer state ID number for that state. If you do have box 12, it's at the bottom here. Again, you just want to select the radial button next to the override, allowing you to type in other of those fund codes and amounts. And then your local, if you accidentally been withholding the wrong town for the wrong village for the year for one of your employees that you thought lived where he didn't, you might end up having to make edits here. And then, of course, box 14, which can be a little bit of a wild card on what's required. Next up, we're going to pass this over to Alex. And Alex, of course, is always going to be the center square on UAN squares. You ready there, Alex?
Yeah, thank you, Chris. Appreciate it. And let's get going here. So I just wanted to touch upon a couple things that we've been seeing in the questions. Of course, we're hearing a lot about libraries at year end this year. Anybody who doesn't know, who's not a library, they're going through a major change in their chart of accounts. So their year end is going to be more complex than normal, and they have to completely stop using the old chart of accounts, switch over to the new one. So there's caveats for all their carryover questions. They can't carry over a PO, they can't carry over withholding, because all those account codes are going away after 23, and everything has to be redone in 24. We put out a supplemental document for libraries, so that kind of takes care of that. For townships, villages, and every other entity that isn't a library, your year end's going to go normally. So you can carry over your POs, you can carry over your withholdings, same way you did it last year. So nothing changing there. Now we're going to talk about printing your W-2s. So we got our sample here of the W-2, and it's important to note that you can enter your W-2 while you're in work year 2023 or 2024. So when you install your temp mode, you can log into either year and work on your W-2s. You can edit and print from either year. So W-2, how are you going to print it on paper? You don't have to buy any specific W-2 forms. Your choice is for paper. If you want to buy it, you could print it on regular plain paper, or you can get the perforated paper and you can go with the 2 sections or 4 sections. and that's just your personal preference. It'll print fine on blank computer paper. And before printing your W-2s, you want to remember that everyone needs a notice with their W-2. So you're going to want to print those first, easier to get them out of the way. You can do it several ways. You could print the notices right from UAN by going to Payroll, Reports and Statements, External Forms, W-2 and W-3 forms, and click that Print Notice button. Or you could, and you could do that for each employee. You could print one notice for everybody, or you could print one and photocopy them. So it's your choice. Everybody does need a notice, and it's the standard disclosure from the IRS for W-2 forms. Once you go to print those W-2s, you'll need to note that there are going to be two sections. Your blue half is going to be your employer, and your green half is going to be your employee. So it differentiates that way for you. Focusing on the employer side, copy A is going to be required for filing federal by mail. We're speaking about filing by mail right now. So you're going to need that for your W-2s and 3s when you file by mail. Copy A. Copy D, you want to print for your records, and you can do that either the 2 or 4 part. So you're going to want to keep that on hand. You could save the file down as a PDF if you want, or you could print a copy, paper copy, and keep that for your records, but you're going to want to keep that for the employer side records. And copy 1, that's going to be required for state, city, and local tax. If you file electronically with the state, 10 or more employees, then you don't have to include that copy with the state. It's going to be electronic, and you want to contact your local taxing agencies to see how they want it, either the 2 or the 4 part. Electronic filing now for the employer copies. There's no need to print the federal copy A or state copy 1 if you're filing electronically. So just need to note that. And printing your W-2 employee copy, here's where you have your options. You have the 2 part or the 4 part. We recommend the 4 part because if you do the 2 part, then you have to manually cut and sort and distribute those. It's going to print 2 employees per page. If you go with the 4 part, it goes 1 employee per page. So you print it once and distribute with the notice. A little bit less work on your end there. And printing your W-3s, we're still in the same section. And you'll notice you can print your W-2s on the bottom of the screen and the W-3. So you select all of your employees and click on the Print W-3 form. And here's a copy of that work screen. So the first question you might have is, what kind of employer are we? State, local, non-501c, or state, local 501c? UAN support can't tell you the answer to that, but the best thing to do is see how you filed in the past. So you're going to want to check your prior forms. You could check how it was done in UAN on prior years, or you could pull out the paper copies, but UAN can't advise you there. And another thing to draw your attention to is in the right side, we have the red box with income tax withheld by third-party sick pay. And if you've been doing that throughout the year, this is where you'll enter it for your W-3. If you haven't been doing it throughout the year and you don't have third-party sick pay, then you could just skip that section. Once you have all that set up, you'll click OK. And now we have to create the electronic file for W-2s and W-3s. So the electronic file for the W-2s and 3s will go to the Social Security Administration and on the Ohio Business Gateway, which got renamed to Ohio ID. You'd select all your employees, and then you'll click File. And now you get this screen that comes up, and you can choose, first thing is going to be if you're filing federal or state. So under File Type, you'll select Federal for SSA. And again, you'll see all the same screens. Kind of employer, again, UAN can't tell you that. You're going to want to check prior years if you're not sure. BSO number, that's required to file digitally with the federal government, Social Security Administration, and that number is given to you by the Social Security Administration. UAN can't help you with that either. We don't have a copy, and we can't help you get it. So you'd have to reach out to Social Security and get that in advance before filing electronically. Then I just want to draw your attention on the left side. It'll have the fiscal officer's information. That's going to be the fiscal officer's contact, email, phone number, all that stuff. And on the right side, again, you'll see your third-party sick pay box. If you have third-party sick pay, that's where it'll be entered. And the most important is your file type. So you want to make sure when you're filing with Social Security or the federal copy, that's what's selected on the bottom, because that drop-down menu will also give you a state copy, and those files are not the same. So you want to make sure the federal copy goes federal and the state goes to state. Then you'll click OK, and that's going to save to your UAN e-files folder on the C drive. And you're going to upload that to the Social Security website. Now we'll do Ohio plus schools. Everything looks the same except the BSO number on the left is no longer highlighted because that's not required to file for state. That's a federal Social Security number. And on the bottom, you're going to want to select the Ohio plus schools instead of the federal as the file type. Same process here. You click OK, and that'll save your electronic file to UAN e-files. And that's what you're going to upload on the Ohio Business Gateway. And as a reminder, Ohio Business Gateway switched to Ohio ID. We still all call it Gateway, but don't get confused when you go to the site and it's something else. Deadlines to remember. January 31st is your deadline to distribute employee W-2s with the notice and mail or e-file to the Social Security Administration W-2 and W-3s. You're going to want to check your state, local, and school tax filing deadlines for their W-2s. You're going to want to complete the corresponding W-2 transmittal form. And if you file by mail, UAN does not produce state or local tax transmittal forms. Additional reporting for tax withholdings. You can go to Payroll, Reporting, Tax Reports, Other, and then for here, we'll start with the Ohio tax report. If you're required to do your reconciliation of taxes for the state of Ohio, this report is going to help you with that. So you're going to select that Ohio tax report, make sure you click this year, set it for 2023 in this case, and hit print. You'll use the UAN report to complete the online or paper form. It doesn't complete the form for you, but the report is going to give you all the information you need to complete that. And then we have the same process for school and local. Again, you'll go to Payroll, Reporting, Tax Reports, Other, School or Local, and you're going to select the choice you want, local or school. You'll select the year, and you'll hit print there. And again, you're going to use this report to fill out your local or school forms, online or paper forms. Printing your 1099s. So last year, the federal government changed their form. So you're going to want to make sure, you definitely have it. If you don't, you might have filed wrong last year. You should have done the change, but the easiest way to spot the new form, it has a 20 and then no 2-digit year-end code. So when you print that out of UAN, prints in that 2-digit code. That's the easiest way to spot the new forms. The old forms would have had the full year printed on there. So make sure you get the new form. UAN, as we touched on before, will print out a full W-2 on plain paper, or you can add it in that perforated paper if you like. But for the 1099s, you are going to need to buy the forms. So you want to make sure you get those correct forms. And this is a picture of the current version. Same version that was used last year. So no big changes there. If you bought a bunch last year, you can use those going forward. And that was the goal of the IRS. It was to not have you buy the forms year over year. And then if you buy extra, you can't use them. So they don't have the year-end date anymore, and you can use them going forward. Again, you must purchase your 1099 and 1096 forms. Typically, those come together in a pack, and they have to be compatible with a laser printer. As you'll see in this slide, the IRS will gladly give you the old tractor feed forms from the 80s and 90s, which will not work in your current printer. So that's not something that UAN could print to. I have seen them printed with a typewriter. So if you want to do it manually, sure, go for that. You can get the free form from the IRS that has the perforated holes on the side. If you want to print it through UAN and make sure there's no typos or errors that way, and it just feeds directly from UAN. You want to make sure you get the form, the modern form, and it's going to need to be eligible for a laser printer. Again, just like the W-2s, 1099s and 1096s can be added, edited, and printed from either work year. So if you're in temp mode and you're working on 2023 or log into 2024, you can work on those. You're going to be in 2024 once 23 is fully closed, and you can still add, edit at that point. And how do we get to those 1099s and 1096s? You'll go to General, Reports and Statements, and Year End, and then you'll select either the Miscellaneous or NEC. If you have questions on that, which one you should be using, you should talk to a tax representative, or you can check the IRS website for the rules there. You're going to want to confirm your year once you select the 1099, 1096 form you're using. In our example, we have the NECs. And then you'll hit add, and then you'll get the new window. So it asks you in the top left, 1099 required or all vendors. So that is a selection you make when you're adding a vendor into UAN. And we'll take a look at that here. So this is what it looks like when you're adding a vendor into UAN. And in the center of the screen, you'll see the 1099 informational box. So if you check 1099 required, then it's going to be put on that list that we saw on the previous screen that said 1099 required. The system's not telling you that the 1099 is required. It's telling you that that box was checked on the vendor setup, and you manually did that, so that's why it's coming on that list. Same for the W-9 needed, so that's informational purposes. Back to our list. If you select only the 1099 required box, and your next choice will be the payment total. So you're going to go with at least $600, or you can go with any amount, but $600 is your limit. The thing to think about here is if you converted to UAN during the year of 2023, you might have payments to a vendor in the amount of whatever that aren't listed in UAN. It was added via conversion summary. So you'd have to manually calculate that and add that to your vendor payments that are in UAN. And that way for you, you might want to click any amount because you know you have paid a vendor outside of UAN for part of the year. But that only really applies to people who converted to UAN this year. Anybody who's on UAN all year, you can put in at least 600 and it will sort the vendors for you. Then you'll select all and you'll click save, and then you'll click close, and that will produce your 1099s. And using the 1099 override field, so this is how you can manually edit a 1099. You'll select them and then click edit, and then you'll see the 1099 edit fields. So you can click the override section, and that would allow you to, on the left side, override the name and address. Why would you want to do that? Well, maybe you have a vendor who's doing business as, and you want to make sure that corresponds correctly. Or if you have a vendor that had a typo to start the year, you can't edit a vendor while the year is ongoing. You can't edit a vendor at all once you've added it to UAN. So maybe you added a second vendor with the correct name. Now, when you're doing the 1099, you have payments to two vendors, one with a typo and one corrected, and you'd want to put that all on one 1099 to the correct vendor. So that could be a situation as well where you'd want to override a 1099. On the right side, you can override the print ID and account number, and on the bottom, you could override the print amounts and walk through there. So kind of similar setup to overriding your W-2 fields. Click the override box and put in the information you need to put in there. After you're done with your overrides, you'll click save and then close. And then we'll talk about test printing 1099. So we told you have to buy the 1099 forms, so I don't want you to waste those. Some 1099 forms, the IRS approves a variety of distributors to create these forms. Some are slightly different than others. So we recommend when you're ready to print, you print out those 1099s, and you're going to print 3 tests. So you select the 3 individuals that you want to print your 1099s for, the 3 vendors, and then you'd hit print 1099. Then you're going to hold that plain piece of paper up to your 1099 form that you purchased. Hold that up to the light and see how that aligns. If it aligns correctly, great, put in your actual 1099 forms, print your copies. If it doesn't align correctly, then you have some changing to do. So you can edit the 1099 fields. You can drag and drop the boxes. And to do that, you'd want to go to General Maintenance, Entity Setup, Forms. And in that, we'll go through it a little more in a bit. But under that, you can edit your 1099 form. So if you have to shift boxes left, right, up, down, you can edit all those. You're going to want to do the same thing for the 1096. So you're going to print your test paper for the 1096 and see how that aligns to the form. If it prints okay, then you're good to go. You don't have to do anything extra. You'll print out that 1096. If everything aligns correctly, put in your 1096 form and print it out. If it doesn't, same as the 1099, you go to General Maintenance, Entity Setup, Forms, and you could edit those boxes around. So now we'll touch on that a bit. So General Maintenance, Entity Setup, select Forms. And here you'll see the 1099 and 1096. It'll say Layout, and it is defaulted to the standard layout. You want to make sure you have the correct year selected for your 1099 and 1096 that you need to edit to fit your new forms. And then you'll click the custom layout boxes. Make sure you have your year. And we have video online. I'm not going to walk you through how to drag and drop all those boxes. There are a few steps. But if you go to UAN link under training on year end, you'll see a training video for the 1099 form design custom layout, and that'll walk you through how to make all the changes, and Bob walks you through a great sample on how to drag and drop in the video. So it kind of walks through it. So now you know the path, and you have a video to get you trained up if you have to make any of those changes. Hopefully everybody bought the forms where no changes are required, and you can skip all that. 1099 and 1096 deadlines. January 31st is the one you want to have stuck in your head. You need to mail the vendor IRS copies by January 31st.
So we're going to start our next section here. It is the year-end checklist, and this is a game show winner, and I'll tell you why. This gets you to that little button that says close the year. And we all want to get to that point. So we're going to look at the year-end checklist. You go to General, Maintenance, Year-end, and Year-end Checklist. And this will show you many things. And the great thing, you want to click on Current Year, and that will bring up your 2023. But one of the cool things is there on the left, you can see system year, and you can see a bunch of regulatories. That shows you how your software was closed, how it was submitted in the last several years. So that's a good clue as to whether you close and you file regulatory or you file something called OA. But we'll talk more about that later. And you can do parts of this checklist at any time. So you can open it up, do a couple of items, save it, and close and come back to it later. So it is a great tool to use. All right, so here is what the year-end checklist looks like. And you can see that we're on year 2023 is what we're closing. We're on version 2024.1, like we said. So you have to be on what version? You got to be on 2023.2 to load and get this version, 2024.1. If you're not on that version, you're not going to see this checklist. So UAN requires you to complete various procedures to be able to close 2023 and advance to 2024. And this year-end checklist helps you do that. So we're going to look at some of these items in the main area first. So what's cool about this is you get different colors to look at. Green check means you have completed these areas. A red check means it is incomplete. You see there are blue question marks. That helps answer questions. And sometimes you're going to see caution marks. And at the end, you see the red flag on the left. That means that your year end is not ready to close. So that gives you some ideas of what you'll see. So we're going to go through a couple of these. And number one, you see the version. Again, you have to be on 2024.1. The computer date must be in December. Now, you don't have to worry about that because it's December 4th already. So your computer date will be in December 2023. Temporary mode must be open. They talked about that, going through opening temporary mode. You want it to be open. It's the only way you'll be able to use this checklist. Then number 4 is the main body of the checklist. They are the tabs that you see on the left that are 4A through 4H. And we're going to go through those individually. Then you see number 5 is bank reconciliation. A bank reconciliation must be posted as of 12/31/23. Okay, so that's over the weekend. That doesn't mean that you don't use that date. You know, you use the Friday date before that. No, you always want to use 12/31/23. Then your computer date to close the year has to be in January 2024. So temporary mode is a great thing. You can see it at the bottom. It says it opens the new year while the current year is still open so that you can do work in both years. It's really an awesome thing. I didn't have temp mode when I was a fiscal officer. I would have loved to have had it. So use it to your advantage. And there's the bank rec. It must be 2021. All right, so we're going to talk about the bank rec real quick before we go through the 4A, B through H. So the December bank rec, like I said, has to be as of 12/31/23. Must. And you can reconcile. So many of our customers they reconcile their bank rec during the whole month so that they don't have to do it all at the end. So you can save that bank rec, but don't post it until later. We have flying arrows. And then you want to post it when you get to that step in the best practices. So just remember that you must have the 12/31 date. So we're going to talk about the bank rec here and outstanding adjustments. So I hope you all know the adjustments area on your bank rec. Those can be for many reasons. They can be you adjusted a receipt up or down. You adjusted a payment up or down. You had a fund balance adjustments because the auditors gave you one. Well, be ready because if you have not cleared them on a prior bank rec, they automatically clear on the December 31st bank rec. So you need to be ready for this. And what can happen is these could throw you out of balance if you've not cleared them earlier and say it's an audit adjustment and the auditors gave you their adjustment, but say they didn't add their stuff correctly and it's off by a few pennies, you're not going to know that adjustment was off until this automatically clears it. So you probably want to go back and look at your old bank rec reports to see if there's any outstanding adjustments and realize that they are going to clear for your December 31st bank rec. And then you may have to go and figure out what these are if you are unsure. So you can look and see what the adjustments are, and then you can figure it out and get those fixed. All right, the year-end checklist. These are those items I was talking about, 4A through 4H. You need to get all of these checked green before you will be able to close the year. All right, so 4A are batch transactions. These mean just what it says. Are there things sitting in batch that you haven't posted? You would have a red X there. And when you click on it, it's going to bring up this for you. And if there's a red X, you'll know I have some receipts sitting in batch that I forgot to post. You'll be working in 2023, and you will go back and either post those items or delete those items. So payments. Now, if you have a payment in for a check, if the date is after December 31st and you haven't posted that yet, then it has to become a 2024 warrant. Now, you can have electronic payments sitting in batch, possibly, like your bank fees, that you could still post in 2023. So you're going to want to look these over and see if any of them have anything sitting in batch. You'll want to go to that area and you'll want to post those items so that you can get a green check on this area. So let's say you have a red X under EFT. If you have that, that means that you have a payroll, EFT payroll, sitting there that you have not made into a file. Now, it doesn't, maybe you don't actually upload your file to the bank. You enter your payroll through a bank software. You still have to make those files. So you would go back to your payroll transactions EFT area, and there you would post those items so that your 4A will have a green check mark. Now, this is a bad area, withholding adjustments. You hope you don't have a red X there. But if you do, we can help you out with that. But these items cannot be carried over. So a withholding adjustment, let's give you an example, is like, say you have an AFLAC program. And that AFLAC program, a guy, was getting it, but then he canceled. You forgot that he canceled, so you took it out of his check. You called here, you said, oh no, I took it out of his check. So we helped you to make a wage adjustment and refund that amount of money to the employee. Well, that's great, but now you have a negative amount sitting out there that should have been attached to a withholding payment at some point. So if this has a red X, it means you have not grabbed those adjustments onto your withholding payment and basically cleared them out. If you have a red X, give us a call. We will help you figure that out. Hopefully you've got, that withholding, you still haven't paid it, and you can attach that adjustment. But if not, we can help you do that. So give us a call if that happens. So to find out about your withholding adjustments, you want to go to Payroll, Reports and Statements, and Withholding Reports. And you want to go to the Withholding Adjustments Unpaid. So this will help you figure out what those items are so that you can get them taken care of before you try to close the year. Okay, now we're going to move on to 4B, which is AFR, Demographics and Debt. Now this area, you see the star up at the top left? That means that you can gather information that you need to fill this out before the end of the year. So we're going to look at these to get separately so we know you can understand both sections, the top red section and the bottom blue section. So the top section. Here you are selecting your submission type. And that's what I was talking about, where it was regulatory. You saw all those regulatories. That was a submission type. So here you have submit through UAN with AFR filing and complete these requirements online, GAP or FASB. So you need to know which way you are supposed to submit your year-end information. Most of you will be and will want to submit through UAN with AFR filing. It's great. It makes it easy. It gets submitted, and we file it to the Hinkle system for you. Now, the other one, complete these requirements online. That would be if you're usually a larger entity and you file GAP or FASB. Not many people do that, and you have to, if you check that, we are still going to send your information and your reports in, and the auditors can get to those reports. But you have to take care of entering your annual financial system, your annual financial report numbers into the Hinkle system on your own. So here you can see, if you could choose the bottom one, all entities must complete these Hinkle system requirements by the same deadline as the UAN submission, regardless if they are completed in UAN or on the Hinkle system website. So again, most of you are going to be submitting it through us. Now, if you do submit it online through the Hinkle system website, you have to have a password to override in UAN, allowing you to close the year on UAN. And you get that from the Hinkle system people. So if you are a GAP, then you will want to make sure that you can get that password. Now, the other side of this is the additional audit reports. So these are UAN generated, and you want to include the additional reports because these are reports that your auditors are going to use. And it means that you will have to send less reports to your auditors. If they're using Audit Workbench, which is basically our software, but aligned for them, made for them to use. So you want to have this include additional reports so that the auditors aren't bugging you for a bunch of information. So here you see that various reports, and it's talking about those reports, are sometimes reviewed by audit staff prior to your formal audit. They can be submitted along with your AFR, and UAN will automatically generate those reports for you. So, of course, it's much easier to do it that way. All right, so here is our next section on 4B. This is the area where you're going to have to enter some of that information that you're going to want to gather. Now, this looks different for townships, villages, and libraries. It can look a little bit different. For special districts, you don't have to worry about this because it is blank. So you're not required to enter any other data. For townships and villages, you have to enter the population field, and libraries must enter number of patrons. So your population, that comes from the last census. So you'll need to find out what that number was. so that you can put that number in here. Now the next, if you see the two rows that have numbers in it, those are filled in for you by UAN. The top one is the total annual financial appropriations for all funds for the reporting year. So this is your appropriations that were entered for 2023. So that number you can check out on your appropriation status report. The unrestricted general fund carryover cash balance, that is also calculated by UAN. So you don't have to worry about entering those numbers. In between the two, there's the full tax rate, inside millage, and the full tax rate outside millage. The total assessed property tax valuation. We, UAN, cannot tell you these numbers. These come from your county auditor. They are different by each entity. It depends on what your inside millage is and whether you've voted in any outside millage. And your total assessed property valuation, that is a dollar amount. But you have to get those from your county auditor if you don't know them. The bottom rows, let's see how many, 7, 8 rows, those are about your outstanding debt. You may not have any outstanding debt, so you won't have to worry about entering anything. But if you do, you need to have your loan documents available, and the numbers you put in here are the outstanding principal as of December 31st, 2023. Okay, so that information, again, you have to get elsewhere, and that's why it was starred, so that you could get that information before closing. There's the population, we talked about that, the assessed valuation, and then your debt. All right, now we are going to move on to 4C. This is your annual financial report area. This is where you're telling us how you are going to file. So you can see there in the green box, ACBOA modified cash basis, and it tells you what that is. The entity has at least one non-pooled investment. ACBOA cash basis, the entity has only pooled investments or none, and then regulatory. And again, most of you are going to file regulatory. So you can check with your auditors how you filed in the past. But again, you could see what on that page that we looked at earlier, where it tells you how it was filed. Now, if you are filing ACBOA, look at the bottom. See all those greens and reds? That is the extra work that has to be done when you file in the first two ways. Once you click on regulatory, that actually goes away. You won't see that whole bottom section on classifications. Now, notes and documents. These are not prepared by UAN. They are separate, and they have to be uploaded into UAN so that they will be included in your annual financial reporting to the Hinkle system. So you need to type up those notes. Oftentimes, if you're new and are unsure of what that is, your auditors can help you. LGS has also put together some papers and how to fill or do your notes for townships and villages. So there's plenty of things out there to help you with it. But we cannot do these for you. They are done by yourself and then they're pulled into the software, and that will be shown to you later. There's that annual financial report, and here's the extra amount you would need to fill out if you're doing October. If you click on regulatory, again, I said that those items, it would be gone, and there they are. It's blank, so you don't have to do those extra classifications. Regulatory filers, if you have a fund that needs to be mapped, you still need to use the fund utility. The fund utility is used for those, most often for the OCBOA, to specify certain classifications for receipts and payments. But if you have to map something in your regulatory, you still need to use the fund utility to do that mapping. Well, what is mapping? Mapping means that you have a fund that should actually be included with your general fund information, and your auditors can tell you if there are any funds that need to be mapped to another fund. It's very easy to do within the fund utility, and all of the information from the second fund gets included on your annual financial reports with the general fund, and that is done. We take care of that in UAN. That shows you where you can find the fund utility in general, reports and statements, year-end, and the AFR fund utility. That is where you can map the item, or if you're filing OCBOA, that's where you can do the classification. Okay, 4D. This is information about the entity and the fiscal officer. I'm not sure why there's a modem number on there anymore, but you can enter all this information, and not only does it help us out, but it gives auditors the information they need to be able to get a hold of you. Now, especially look, and that's this area, you can put your email address in, and this area with the fiscal officer name. If your name isn't Brutus Buckeye, then you need to change it. If your name is not in this box, then you want to make sure it is, and you can do that in Entity Setup. And that's where you see that your name here, and it gets printed on your POs and your receipts also. You also want to check your Ohio tax ID number here and your federal tax ID number, just to make sure that they are correct. And there it is, where you can fix your name, which is General Maintenance Entity Setup. Okay, hardware, this is 4E. Again, this is a starred item, hardware and mailing, which means you can get this figured out before the end of the year you're trying to close. So here at the bottom, your UAN hardware address. We want that to be the physical location of the state-owned hardware that you were given by UAN. Now, I know some of you have laptops, and it can be here and it can be there. You take it with you, but where is it most of the time? And put that address in there. If that is the same as your mailing address, then you can click the same as mailing address. Up at the top here, it's asking for the UAN hardware tags on the state-owned hardware. And this helps us maintain an annual accounting of inventory. It lists the numbers for us so that we know who has what. So if these are correct numbers, and you can see from UAN records on the right side, that is going to populate for you, and that's going to tell you what we have as your numbers. You can, in the year-end procedures, you can see a picture of where you can find those numbers. And if they match, then all you have to do is click the two boxes next to those numbers, and it will automatically put them into the green boxes for you. If they are not correct, then put in the correct numbers for us. There, when you check mark those boxes, it gets put in for you. And there's where you check mark them. Okay, 4F. This is next year's fiscal officer information and details. So who is the fiscal officer next year? Are you is it the same as current fiscal officer, you? Or maybe you're retiring and you've been training your new fiscal officer, and then you would want to click on newly elected or appointed fiscal officer and the as of date. If it's the same, we already have that information. If it's newly elected or appointed, please put in their name, address, phone number, and email. That gives us the ability to contact them and get them any information they need from us. And here at the bottom, this is what we talked about earlier, which is the purging of those prior year reports. So here we are making you acknowledge that you understand when you close the year that the year 2016 reports will be, the year and the data, in fact, will be removed from the application. So UAN software maintains 7 years of prior year reporting for clients. But you will want to print any of these reports that you don't already have printed. It's great, you need to keep these for information in the future, but realize, and you have to acknowledge that those 2016 reports will be removed, so get any reports printed before you close the year. Okay, 4G. Now this guy's having a little fit. Because if you check this carryover POBC area, it will not stay checked if you save this area and go out. If you save, go in and do a bunch of work, and then you save the year-end checklist and go out and come back in later, this will not remain checked. So basically, because things can change. So say you did some of the information earlier, and then you saved it and closed it, and you went out and you opened up another PO, right? Because you had to use it here. Well, that's why we do not check that, because this is information right before you're ready to close. So we were talking about earlier of checking out your POs for 2023 and figuring out whether you need to reduce them or close them. Because all of these that are in this list will carry over and will encumber appropriations. So you want to make sure that you want them to carry over into 2024. So right before you're getting ready to close the year that you're not going to get that All-American Fire Equipment invoice in 2023. So it's fine to carry that over because you're going to pay it 2024. But if, gravel pit, you are not going to use, or you're only going to pay, $500 of it instead of $1,000, then this tells you let's reduce that so that I am not encumbering that other $500. So that's why he's having a tizzy fit, because he's sick of checking that box. So don't check that box until you are ready to carry over these POs. Okay, and the same thing is true with carryover withholdings. We talked about it earlier, that you're going to have certain withholdings that should carry over into 2024. And you'll have some that you'll pay by the end of the year. So you don't want to check this box until you are ready to close the year. And this area helps you understand what withholdings are being carried over into 2024 and that you're going to pay there. So with the ability to be able to work in 2023 and 2024, this can be confusing because you've carried over, right? It's 2024 now, and you say, oh, hey, it's time to pay the Ohio Department of Taxation by the 10th of the month. So I pay that in 2024 just so that it gets in on time. Then I come back to this checklist and I'm looking at these withholdings and I'm like, oh my God, the Ohio Department of Taxation is still on my list. Well, it's supposed to be because it was carried over to 2024, right? Because you paid it in 2024. So therefore, it will still be on this 2023 list. So don't let that confuse you. But this is just acknowledging that you will have some withholdings carry over into 2024. But again, you will not want to check the box until you are ready to close the year. Now let's go over the bank rec. I can't hear you, so what I would ask is, what should the date be, the as of date be for your final bank reconciliation of 2023? Well, the answer is 12/31/23. Just remember that, make sure it's dated that way, and you'll be good. So after you're sure that you have entered all of your information for 2023, then you can complete your bank rec. So you may not have your interest that was posted late in December until later. So that's why you want to not, do it for 12/31 and wait and realize, oh, I'm going to get that interest, so I'm going to do an interest voucher, right, for your receipt. You can do that. You can put the interest back into 23, that where it should be. And that's why you want to wait on your bank reconciliation. So you can see that this guy is very excited because he gets to walk up that staircase to the door that will open after you've completed this checklist, the year-end checklist. He gets to walk up there and shut the door on this year. So this checklist is really cool because it is a great way to make sure that you are getting everything done for the year end. That is it for me. So whoever, let's see, who's up next? Which guy do I turn the winning wheel to?
Hey, Suzanne, that's me. It would be Alex next. So let's see. Here we'll be doing the AFR fund utility, and we'll be talking about OCBOA filing and mapping and all our good questions here. So let's back up here and restart. Okay. And it does not look like that wants to work right. All right. So we're going to go through some mapping first. So a small percent of UAN clients are going to have to go through this process because you're ACBOA filing. And we're also going to cover custodial funds when you're going to map those. And we'll cover one in particular. And then we're going to go through some uncommon circumstances. So fund mapping utility. 4C on the checklist, the AFR fund utility. And it depends on how you're filing here. So if you're filing regulatory, most likely you're not mapping anything. If you're filing ACBOA, then you are going to have to map some things. If you're not sure whether you're filing modified cash basis or cash basis, then you're going to want to check how you filed in prior years. First, you'd go to General Reports and Statements, and then Year End. And then you'll select the AFR Fund Utility. And we've got this little guy. This is the pop-up you'll get on this screen. This is our little minion buddy. And typically we don't tell you to wait on these pop-up messages, but in this case, you are going to want to put that on hold. And we're going to go through some situations on when you're going to map things and when you wouldn't, and when you're going to call LGS to phone a friend for help. So, review custodial funds, if any. Do you have custodial funds? And will you have to map them? That is the question here. Under the AFR fund utility, we have an unclaimed money fund. This is going to be one of the examples where you will map something and we'll tell you the answer on having to map it. If you have an unclaimed money fund, that would get mapped to your general fund. You'll see the column off to the right. It says mapping required. I don't want that column to confuse you. That column is a historical column for the tool, kind of goes back through an old software setting. It's not telling you, no, you don't have to map the requirement. It's not required to be mapped, that fund. What that's telling you is you can close year end if it's not mapped. So if you're ever not sure if you need to do mapping, the things you want to remember are you filing regulatory? If you're filing regulatory, you don't have to map anymore. If you're filing regulatory and have an unclaimed money fund, that you can map to the general fund. And the mapping is going to show how things are showing up on your annual financial statements. If you're mapping something to the general fund, then it's going to come under that balance. And we'll give you an example of that later. So unclaimed money fund gets mapped to the general fund, and for everything else really mapping related, we kind of advise you to contact local government services. Our ACBOA filers, they're going to have to go through some mapping. So if you're filing regulatory, you'll see a situation like this. And here is an unclaimed money fund. Category is custodial, and it's under other custodial. And again, if you're unsure on mapping, you're going to want to call LGS, just as it says on the very top. UAN can't tell you, except for the one case of unclaimed money, where that does get mapped to the general fund. So when you change this, this impacts the column headings on the AFR combined statement for proprietary and fiduciary funds. And we got our little minion back, and he's kind of wondering to map or not to map. And we talked about this before. UAN support can't suggest which you should enter here unless it's the unclaimed money. We'll tell you to map that to the general fund, and all other questions, you're going to want to poll the audience or phone a friend. You don't want to be the weakest link. So you're going to want to call local government services to see what you should do there on a policy situation, because they can help you with a compliance issue, where UAN support, we're walking you through how the software works in the tool and can't get too into the weeds on compliance questions. Fund mapping. On the right side, we've got the map 2 section. And if you are mapping, in this example, custodial fund, and we're talking about mapping, we are not talking about this kind of map where you're seeing a football diagram where we're mapping out players. We are talking about your annual financial reporting statements, and it's going to be more mapping like this, where the general fund is eating up that unclaimed money fund. The big fish is eating the little fish, but it's not quite so scary because it's just on your reports at year end. The fund is consumed by the larger fund for AFR purposes. So unclaimed money's balance would be consumed by the general fund. So on your annual financial reports, the balance of that unclaimed money fund would show up in the general fund ledger, and it wouldn't show up on its own. So when asking to map or not to map, let's see. The first thing you want to do is think about if you're filing regulatory OCBOA, and it only impacts your annual financial reporting. That's all the mapping will do. It doesn't change your fund balances, doesn't change your budgets in the system, only changes your annual financial reports. Let's see. Then the last thing, unfortunately, UAN support can't answer your mapping questions. We can only tell you the one fund, which is the unclaimed money fund. Gets mapped to the general. LGS gave us the okay to go through that. But everything else for mapping questions, you want to go through LGS. And if you're filing regulatory and do not have an unclaimed money fund, then you don't have to worry about mapping at all. It's mostly for our OCBOA filers who have to do the mapping, or if you have the unclaimed money fund, you'll map that to general. And again, same pop-up, you'll even get it in the system, just telling you that UAN support can't help you with the mapping questions. So here we talked about the mapping required field, and it's just important to know this isn't a column that excludes you from mapping. The mapping required field is a holdover, and it's just telling you can close the year. If you're OCBOA, you may still be required to map. So you're going to want to first check and see what you did last year. And then if you're still not sure, you're going to want to call local government services. And here is our mapping example. So we'll do unclaimed money and the general fund. This is LGS approved. They've given us the go-ahead to walk you through this. So what you'll do is select both funds, and the unclaimed money fund you'll see will be consumed by the general fund for your annual financial reporting statements. And you'll select how you are filing, regulatory or OCBOA. And in the top left, you will see the general fund balance before mapping is the 984,760.37. Now you'll click the next arrow to go to the second fund, and you'll see the balance up there is 1752.25. And then you'll, on the mapping side, map 2, and you'd select the general fund because it's your unclaimed money fund. And from the drop-down menu, after selecting map 2, you'll select general. And then you will poof, that little box will go away because it's now mapped. And it sends the 1752.25 to the general fund for your annual financial report. Go back to the general fund by hitting the back arrow below in the bottom left, and you'll see the balance has increased overall in the general fund, and it's absorbed that unclaimed monies fund. So unclaimed monies fund is the one that UAN can tell you needs to be mapped to the general fund. And we have the case of the big fish eating the little fish. General fund absorbs the unclaimed money fund. Next, we'll move on to manual input forms. There will be some forms in your annual financial statements that no matter what you do through the course of the year while doing your transactions in UAN, those figures would never get input into UAN, and they are required on the annual financial reports. So first one we have here is the cash reconciliation, and these forms are all going to be very basic manual input forms. So we've got the breakdown of the categories: bond and coupon, payroll clearance account, debt accounts, other outside accounts, all these things. If you have any of these, this is where you would fill it out. It's not required and it's not very common. So if you do have these, then you are required to fill it out. But if you don't have them, you might just leave it blank and skip over this because it is not common. And your data entry might be necessary, so you're going to want to check to see if you have any of these accounts. And what it will do, it will be the first report on your annual financial reports. It will give you the cash reconciliation, and you'll enter those in. It'll be the very first page on your report if you have these accounts to enter. So you're only going to complete these if they apply. We went through the cash reconciliation, and you're going to want to print any of these for your records. They will be part of your annual financial reports. You don't need to add them anywhere else in UAN. And when you submit your AFR reports at year end to the Hinkle system, they will automatically go over into the Hinkle system. There won't be anywhere else you need to add these reports or any other separate submissions. They'll automatically, once you fill them out, if you have these, they will become part of your annual financial statement. Let's see, we've got Appendix 2 covers all of these manual entry reports. So if you have any questions, it goes into deep detail on the annual procedures, and it's under Appendix 2. It covers the cash and assets, the cash reconciliation, schedule of debt, and schedule of outstanding debt. So our next report we're going to go through is the cash and assets not recorded. Does this apply to your entity? If it does, you're going to have to fill it out as needed. And if you have something, it's just a very generic data entry. So you'd enter in your accounting number, institution, and a description of what it is, and put in the amount, and it will get added into the report for you. Again, does not apply to everyone, but you will need to fill it out manually as needed. And when there is ongoing debt, we have these two reports, and they are conda linked. So we have the schedule of debt service and the schedule of outstanding debt. So you'll do outstanding debt and hit add. And here's going to give you a simple form. This is going to cover any debt outstanding for this current year. So what year was it issued, brief description of the debt, what it was for, the interest rate in the year, and basically this is inventorying what happened in the year of 2023. So where did you begin the year? January 1st, 23. Was any more issued? Was any more retired? And the ending balance for the end of the year, December 31st. So the schedule of outstanding debt covers your debt for 2023. And each loan note will be put in here separately. Here's our example. We went through, you would just change this to 2023 in this case, and purchase of a truck for zoning. We have our interest rate. We have our January 1st balance. And if you had any more debt issued during the year, it would increase your balance down below for 12/31. And if you paid it off or retired any debt during the year, it'll decrease that balance down below. So it's interactive in that way. Again, very basic data entry. You'll save here, and then you'll enter the next note. Same process. You'd put in the next loan that you went through the year, interest rate, beginning of the year balance, a brief description of what was going on, and it'll calculate your end of year balance. And any of these that you do enter, you want to print and save them for your records for any public record requests. And here's a copy of what the form will look like. It's very basic. It goes right in with the annual financial report statements, gives you the breakdown of both line items, and it covers all the details that you entered. Very simple to go through that one. Schedule of debt service. This is a little more complex. You're going to lay this out in a spreadsheet if it's going over many years. And this is basically how you're going to service your debt or repay it over time. So you'd put in the first, if your debt is going to go 5 years. You would enter up to 5 years individually. You'd enter each one of those years going out. And if it's going to go longer than 5 years, after 5 years, you can summarize, and you would put in one entry for 5 years going after. So if your debt's going out 20 years, the first 5 years you'll enter individually, and then the remaining 15, you would have 3 different entries that you would have to calculate all this on a spreadsheet off to the side. But then when you put it in UAN, you can summarize and put it all together for the 5 years groupings. So you'd put in your year, so starting with 2024, and you'd put in the principal amount, the interest amount, and what's going to be paid throughout that year. And this is projecting forward your debt service. You'd also enter 2025, separate year. You'd do the same thing. And this is what we talked to about walking through 5 years individually, and then you can group them together in groupings of 5 going forward. And on the right side, you'll notice that it keeps a running total of your service going forward. And as you keep entering those years, it keeps aggregating that for you. And this is going up to 28 now. And it goes through your principal and interest again, calculates the rest. Now we have the 5-year summary. Here's where we would jump to 2033. And you'd put in your 5-year summary that you keep off to the side on your spreadsheet. And again, if you're going out, say, 15 years, you'd put in your individual first 5, then the next 2. And this is what it'll look like once summarized. And here again, you're going to print these reports and save them. They're going to be automatically transmitted to the auditor state with Hinkle reports for your year-end filing. You don't have to do anything separate in UAN, but you're going to want to print a copy for data record retention and any kind of public records request. Here's a copy of how that report will look once you pull it up. And you'll have your fiscal years, you'll have your summaries on the bottom, and you'll see it aggregates your principal and your columns on the right. Okay, so AFR components. This is kind of on the rare side. You are going to print and use the reports under here. It's going to be under General Reports and Statements, Year-End, AFR, OCBOA, or Regulatory Statements. And you're going to find the reports you need. So first, you could have your combining statement, governmental, and you might need several reports from this list. What's important to know when you're pulling a report from this list, unlike the rest of the year when you're going in UAN and you're selecting accounts to print out a list, you just simply choose the report you want and hit print, and it will produce that report for you. You don't have to select funded accounts like you would for other reports like appropriations or a fund status report during the year. Under year end, you're going to simply select the combining statement or combined statement, whatever you're going to need, and then you print that report and it produces the report for you. If you get the message, no data to report, then it means it does not apply to your entity. For AFR OCBOA statements, the net position report, we've got several reports on the drop-down list here. You want to select the report and print. There are no items to choose again, same as the last report. And no data on this report means it does not apply to your entity, so same as the prior selection. And here are our AFR statements. That's the scrolls that you'll keep at your entity, the good books that you will be called upon for record requests. So all these reports as you go through, you're going to want to save down your annual financial reports. Anything extra you manually add in, you're going to save those too for record retention requests. But again, you're not going to add them into UAN at any other place, because they're going to be put in on the previous screens that I showed you, and that is the only place they get added into UAN. All right, we are live here from UAN Game Show Land, ready to spin the big wheel and solve some puzzles for prizes. First thing we're going to do is solve that year-end checklist. So we have a few more things to get through on year-end, and then you're going to be closed out for the year to the joy of everyone. So for your training notes, this is something that you're going to be manually adding into UAN. You can get a training notes template for your AFR notes, and you can watch the training video on our website. If you go to uanlink.ohioauditor.gov and go under training and year end, you'll see the notes training LGS guest speaker presentation video, kind of walk you through how to fill out the notes document. And what will help you with that will be the budgetary notes information export found under general reports and statements, AFR regulatory statements, and the budgetary notes information export. You'll save that down, and then that's what you're going to use to fill in the notes template shell. So if you filled out the AFR notes last year, then you can copy those notes over and fill out your information based off that report and change the dates. Or if you don't have that, or you're a new fiscal officer, you can get a sample of the AFR notes document. You can get that from the website, and we'll show you that in a second. But it's going to be a Word document from the auditor estate, and you can edit it, and it will have the highlighted changes. I don't believe they've updated it yet. I think it's still the 2022 out there. But in the next few days, they'll typically have that updated for you for 2023 year end. So where you're going to find that is on the Auditor Estate's website under Local Government, then under Reference Materials. That'll take you to this page, and you'll see a section for Annual Financial Statements, Shells, and Footnotes, and you'll file, if you're filing regulatory, you'll click Regulatory, and you'll see a section like this. So we highlighted the townships, villages right below it, and you would click on the Notes document. That'll download it right to your computer. Then you'll edit that Word document combined with a report from UAN, and you should be in good shape for the next year. Now we'll talk about how to attach that file into UAN once you filled out that Word document. To do that, you'll go to General, Reports and Statements, Year End, and then you'll click on AFR Notes and Documents. Here, you're going to want to check your year, make sure you put it under 2023, because say for some reason you didn't attach the correct notes document from a prior year, you can always go back and do that in the same section also. So you want to make sure you're on 2023. Then you'll hit the Add button, and it'll pull up this file folder finder. So you just hit Browse, and that's where you would select the location of your newly filled out Word document. You want to save that Word document down as a PDF, because Word document is going to cause problems. It's not going to import to UAN, and it's not going to transmit to the Hinkle system. So before you go to add it into UAN, save that document as a PDF file. And here's our 2023 notes for Buckeye Township as our example, saved as a PDF. You'll hit Open, and you'll see the file name here, and you'd hit Save. And then you want to verify everything was successful. So it'll tell you it's been added. You're going to hit OK. And now we'll go through the verification process. So on the same screen, instead of hitting Add, you're going to click on your notes file and hit Display. What you don't want to see is pictures from your last vacation here. You'd be surprised how often that comes up. But what you do want to see is your annual financial notes document. So let's try that again. And this is an idea of what the document should look like. Here's just the template version. So you want to make sure that PDF gets uploaded correctly. Now it would be stored in UAN. The next thing I want to highlight is don't overload this area. People like to stick in all kinds of other reports in the AFR notes document. It is only for that one note file. You don't need to save down any other reports and import them as a PDF. If you do, you're causing yourself problems. There should only be the one document in this file, one notes file, that's all you need. Don't overload this area. Closing out the year. The last steps here, we're going to go to General Maintenance, Year End, and the Year End Checklist. Make sure you're clicking on the current year. And this is our last chance to review some items. So you really want to pay attention, because if you're going to close out the year, there's no going back, and things that you do set will be set in stone, and they're going to cause you a lot of trouble if you just blow through this and don't really pay attention. So First thing is the AFR notes document we previously talked about. You want to make sure if you're filing regulatory, you just have the one notes file saved there, and it'll tell you how many files you have on the checklist. Next, you want to double check your carryover PO and BCs. You want to make sure that you acknowledge this and you're carrying over exactly what you need and no more, because if you do carry over a PO that's for too much money and then you want to reduce it, you're not going to be able to apply that money to your budget in 2024, because that money that gets carried over is from your 23 budget. So it goes as a reserve for encumbrance for all of 24, and if you carry over too much, you can't use the balance until 2025. So you really need to pay attention to these figures and carry over just what you need for exactly to make the payments, and not anymore, because you're just going to tie that money up for a full year if you don't wind up using it or use less. Again, you want to trust yourself, but verify that number is accurate. On the top of the screen, it gives you total encumbrances. Make sure that's a number that makes sense for your situation. You don't want to carry over $1 million worth of purchase orders and then completely mess up your budget for next year, because there is no way to get that money back. It will be frozen for a full year if you carry over the wrong amount for too much. Then you want to check your carryover withholdings. You don't want to be carrying over withholdings from prior years. You want to clean that stuff out. I went over that in the pre-year-end video. You really want to give yourself a clean footing getting on to the next year. Now, it's common to have carryover withholdings, especially if you have a late December payroll. But you want to make sure these make sense and they're carrying over, from December that's unpaid. You don't want to have a carryover withholding from prior months or prior years. You want to address that before you get this year closed out. So be sure you go over this and make sure that's accurate. For the libraries this year, it's going to be a different process for carryover POs and withholdings. We've touched upon it a few times. It's in the library supplemental document. Feel free to give us a call at UAN if you're not sure still. Libraries can't use those chart of account codes 100 and 200 that are being phased out. If you're a library that has already moved on and you're using the new codes, then you have nothing to worry about. You can carry over your PO and carry over your withholdings as long as they're in the new account codes and the old account codes are completely phased out. I know we do have a few that are like that. Any of the libraries that are still using the old 100, 200 codes, there's a whole nother process for year end. So you can't carry over any POs and you can't carry over withholdings under those codes. So again, review those supplemental materials. Okay. Closing out the year. Your last step, once your checklist is all green here, looks great. You want to click I affirm. Read that paragraph. Make sure you understand the fine print here. But that's required to close out the year. So once you click there, you're going to click Close 2023. And it'll move you forward. It'll do the normal database integrity check, which you go through every morning, so that's nothing special. And then you're going to save down 3 copies. First save down is going to be your final save of 2023. Then you're going to have a submission of that file, and then you're going to do your first save of 2024. But you're going to get a few messages that tell you, be very careful that this is what you intend to do. You're closing out the year. You cannot go back. This process is irreversible. So this is, once you're all set and everything, you're definitely done with everything. Then you're going to go through this closeout process. So the first backup is your backup for 2023. And you can submit this through the internet or you can mail in a disk. It's better to submit it through the internet because that way you get the confirmation right away on screen. And some disks get broken in the mail or lost. Then you got to go through the process of creating a copy and sending that back in, because we'll call you and tell you, hey, it didn't arrive, or it's broken. So we highly recommend you do the internet submission. Most people do nowadays. What you'll do is proceed here. And if you're doing the CD, you'd click the top. If you're doing the internet submission, you would click the internet submission section. But this is saving down your first backup. So this is your last backup of 23. So you can either save it to a CD, flash drive, or on your computer network if you have that. Either preference is fine. A lot of people save to flash drives. The only thing you want to do is kind of like label that flash drive and then put it off to the side. You don't want to override that backup with something else. And that's the only difference really with saving to a flash drive as opposed to a CD. Before, when you would save to a CD, I know it's an older technology, but when you'd save to it, that CD would be done and you couldn't override it. It would be a one done thing and you can go back to that as your backup. As a flash drive, if you save a file on there, it can be overridden later, deleted, whatever. So just take more care when using the flash drives these days because we're all advancing in technology. Or the other thing is, having a network drive, saving it there, perfectly fine as well. Once you make your selection, we always recommend you hit the browse button to the right to make sure it captures the correct drive letter. And then just confirm that and hit start. Now, if this screen gets stuck or won't proceed, here's the process, and we go through it in the year-end procedures. But you'd use the task manager to close it down. That would be if it does freeze, and then we can go back and do it again. But hopefully you don't run into that. It's a pretty rare occurrence, but it can happen. So just give UAN support a call if that does happen, and we can walk you through the steps to get you fully saved out and filed. Once you save that and it's successful, the temporary mode closes and you'll see that notice. And then it'll say the second backup of the process, and it's saving the first backup for 2024. So you'll do the same steps as before, CD, flash drive, or network, hit start here. And this is going to save your backup for 2024. And again, it tells you on the third backup you go to save that this is the final submission to AOS because the first one is saving down the last of 23. The second one saves down the first of 24, which is mostly blank, but it has the year end closed. And the third save is going to be your file submission. We highly recommend you submit online through the internet submission, but you can mail the CD in if you'd like. Again, this is what the screen will look like, and if you're doing the postal submission, you'll select up top, put in your CD, and send that over. Most people are doing the internet submission, so you'd click there, and then you'd hit start on the bottom. This is the progress bar, and you'll see the left side. It'll tell you, it's walking through there, and then it'll let you know that it's been submitted and give you a time frame. Then later you can go into your eServices account and check the status of that submission after 48 hours. So that would wrap up everything, getting through the third submission, and your year would be closed. You would have a successful backup, and then you'd just be moving on into 2024. And then you're done with 23. Folks, remember to have your pets spayed and neutered. And with that, my shift is over here, and I will turn it over to Bob, who's our next contestant. Bob, you ready?
Oh, yeah. I'm just out of breath. Been out there doing the shuffle and the every dance move I can come up with. But so far, I'm not winning any cash prizes. It's really a bummer. I guess I don't have the skills I thought I had. Well, let's move on to our next slide here. And we are at the bottom of page 6. If you happen to be following along in the year-end best practices, we are really on the way home. We're going to zip through some of these pages here. Page 6, and it's steps after closing the fiscal year. And this first note here all has to do with really just a minor point. I think all of you will get occasionally. You get so used to being in temporary mode that you forget what the regular old UAN software mode is. And so after you close the year, you're not going to have, we get a few calls every year saying, hey, where happened to the year? Well, you don't have to select that anymore because now you're back in the regular mode after 2023 is completely closed out. You're just rolling along in 2024. So what do you do? This is all outlined in the year-end procedures as well. But the first thing you really should do after you successfully close the year, now it will automatically close the software when that happens. And you do your backups and that happens. And you reopen, log in, and I guess I should say again, it looks like that, right? It's not going to have a year the first thing you should do after you log in is print the cash summary by fund. And we just want to make a extra certain that nothing went wrong in the process. And that's this doesn't happen very often. Like every couple years, someone will call and find that this test fails for one or the other reason. So we want to make sure that there was no technical problems with the year-end close. And you certainly don't want to discover that many months later. So you get to best report to print for that is cash summary by fund. There's some others, but this really works well. So you're going to go to accounting reports and statement, and then it's not the cash flow or cash details, it's cash summary by fund, under fund reports, I should have said. All right, and what you're going to do is you're going to do a comparison. So you're going to print the report twice. The first time you print the cash summary by fund, you're going to it's going to default to the year 2024, and you just print that. It's for January. It's a monthly type report, monthly or yearly report. So you print that for January in the new year, and once you've got that, print out a hard copy to paper, and then print it again. But before you print it again, change the year to fiscal year 2023 and the entire year. So why are you doing that? Well, you need to compare the beginning amounts from the new year, the beginning cash balances for each fund, and compare that to the prior year amounts, ending cash balances for 2023. And they should be identical in most cases. On occasion, they won't be identical, and it's not really a problem. It's an explainable problem. So we've had that too, where people call and say, hey, they don't match, did this test. And what we found is that if you actually had activity, maybe you had an automatic payment hit on January 1st, or you're just a radical. You're in there working January 1st, getting some bills paid at the beginning of the year, and you have a bunch of payments or receipts posted on January 1st, then that's going to affect your new year beginning cash balance when you compare it to your December 31st ending cash balance. So that would be an explainable situation. You would just figure out those transactions, and it should still foot when you compare them. But if there's no explanation like that, then that would be a technical problem, and you'd want to get our UAN representative on that right away. But yeah, it should be fine, and we encourage you to just take that extra step to make sure. All right, so the next thing on would be on page 7 there. Let me start that over because I'm talking the year, and that's quite a long. Here we go. You have to repeat all of it when you do this, I guess. Okay, so next item is the certificate of total amount from all sources available for expenditures and balances. And that's off the screen, or you could just call it the year-end balance certificate. So now is the time. It's not by accident that we added this to page 7 of the 8-page document. Now is the time to print the year-end balance certificate. You don't want to print this too early, and you don't want to print this in the wrong way. Now, you don't even have to use UAN to submit this to the county auditor, but why wouldn't you if the county auditor would accept it? Most counties will. There are some that require the year-end balance certificate in a different format. And if you're new and you have no idea what I'm talking about here, then you need to understand, well, there's my reminder that it must be in 2024, and I'll explain that in a moment. But if you're new, this certificate is going to tell your county auditor that what was estimated on an earlier amount that your county auditor certified back usually in August or September, what your ending cash balances for each fund, you're confirming this is what the actual amount was for 2023. So earlier in the year when most counties require you to do a tax budget, or back in June, July, And when the county will use that, your estimate of what you're going to end up with at the end of 2023. And that's not going to correspond exactly to reality in most cases. Of course, it's just our best guess estimate of where, what we're going to end up with at year end. Our bills are not always exactly as we anticipate, or our revenue. So this is this is the whole point of this: is you're going to send the certificate to the county, and they're going to use that to produce your amended certificate of estimated resources to run. You should already have the official certificate that they certified. They use this to adjust that with changes based on your beginning or ending cash balance for last year, beginning for this year of 2024. Now, you must produce this year-end balance certificate in 2024. That's why we place it at the back of the best practices, and I'll explain that further in a moment. How to get to the year-end certificate in UAN? Well, it's off the beaten tracks a little bit, and that arrow's a little bit off beat there. You go to the budget software, which is optional software we have. So you got accounting, payroll, then budget, and then you select transactions. And then the second item of 2 that's on the transaction list for budget is the year-end balance certificate. And you're going to want to make sure once again that you select 2024 in the year. Now, so of course, it will default to that if you've closed the year like we have using the best practices. If you try to produce this certificate while you're still in temporary mode, then it would be easy to go in to log into the year 2023, and it will default to 2023. And if you print a year-end, add and print a year-end best practice, I keep saying best practices, a year-end certificate while you're logged into the wrong year, while you have the wrong year selected, then it's going to be the wrong certificate. Okay, so if you look at the picture here, you see I've got 24 selected, and right below that in light gray, it says balances as of December 31st, 2023. So it's always looking back at the year before and saying we're going to report your balances at the end of the year prior to this. Okay, so we highly recommend, even if you don't, we recommend that you wait until after you close the year to produce this and send it to your county auditor. But at the minimum, wait until you've completed your December 31st bank reconciliation, and it's balanced, and you're certain you have no adjustments whatsoever. Because any change, if you have to void the December 31st bank rec and redo it, well, that's going to change your year-end balance certificate, and you've already mailed it off or sent it off to your county auditor, and that's not a good thing. So I do not know why the county auditor would require it any time before you close the year. Now, I guess some of the reasoning behind that, some people will want to get it done before the close. I'm told is that, hey, all I need to do is kind of make some edits to our notes and financial statements, but basically the year is closed. So I can kind of understand that. But I guess, keep in mind those edits and notes might result in you realizing, hey, I need to enter some kind of adjustment in the old year. And then again, that ruins your certificate. Once again, you have reported the wrong thing to the county auditor. So ideally, it's best to wait until after the year is completely closed. But if you're not going to do that, at the very minimum, wait to you're very confident that your December 31st bank rec is complete, won't be voided, and you have no adjustments to do. All right, and understand how this form works. You got to be in 2024 to print it for the year end, December 31st of 23. All right, so, well, you can't just print it, you have to add it. And you click on the add button, and we'll have one of our little helpers tell us that, yeah, make sure you put in a name for it. And again, you can name this anything you want, but why not just name it 2024? Because that's what it represents. It's just pick it from a list, and you'll select all of your usually you'll select all of your funds, but in some cases you may uncheck some of the funds. So what am I talking about here? Well, some of you have custodial funds or fiduciary funds. Particularly custodial funds are not budgeted. So like in a village, you might have a mayor's court. That's going to be a custodial fund. We gave an example of unclaimed monies. That's a custodial fund. And that's our example right here, the 9001. And so that would be something that's not you're doing on behalf, or it's not really part of your budget. And so you would not necessarily include that in the year-end balances for your county auditor. We do have a setting, and we've been to this a few times today already, so I didn't put the path up there, but it's under General Maintenance Entity Setup. General Maintenance Entity Setup. And System tab, there's a setting that it can be changed each year, but I'm not sure why you would do that. And the default is custodial funds aren't budgeted. And that generally makes sense. It would be very unusual to budget them. The auditor state does not require you to budget stuff like the mayor's court you keep track of in your records, or the unclaimed monies and other examples you might think of that are custodial. So if that's set, then this is something that you wouldn't include in the year-end balances. So you just uncheck that box. That's all there is to it. And then you could save the form. The nice thing about the year-end balance certificate, so there it is. It's available for pick list. And really all you need to do, if you follow the year-end best practices, the way we've outlined it here, you've already entered in your revenue budget for 2024. That's works into part of the year-end balance certificate. So that part's done. UAN knows about that and incorporates it into the year-end balance certificate accurately. As long as you entered your revenue budget accurately for each fund, you're in good shape there. And all of your other data, since the year is closed, it's up to date. So UAN will do really all the work for you. All you really need to do once you add it that way is print it, take a good look at it, and send it off to your county auditor. So select and click print. Now you'll want to print it and keep a copy for your records. You want to retain your own copy, print copy, and then you want to, and your audit will want to look at that, your auditor state's office, and you want to send one to the county auditor in some format, however they prefer. And the county auditor, like I mentioned before, is going to use this. They're going to take a look at what you put in, maybe especially if you revised anything in your revenue budget. But if you're, they're looking primarily at your beginning balances, end of balances from last year, because that's definitely going to be different. And they're going to use this to recertify the official certificate, original, to the first amended certificate. So let's move on to next topic here. Meeting your annual your annual requirements for the auditor state. There are deadlines for this. And the deadline, the deadline is 60 days after December 31st, 2023. And guess what? 2024 is a leap year, so that is going to bring you to February 29th. That's when the 60-day mark hits. So you have that long to, stay in temp mode if you need to, and clean up, prepare your notes, the financials, do your debt schedules, get all that stuff done, and still operate in temporary mode. Obviously, most people don't wait until the very last week there, but you have definitely some wiggle room in January and through February to finalize your year for last year and still operate. But you'll have to submit that, as mentioned today, either by disk or by email. Not by email. I didn't say that. Through the internet submission or by disk when in that that third backup. And here, let me get my computer functioning right here again. Okay. So, like it or not, your file date, is equal to your receive date. So, in other words, when we get, on behalf of the auditor state, when we receive that file through a internet transmission and it's confirmed and processed on the auditor state servers here through UAN, that is the date we receive it. So if you get that, or if you mail it and it takes a little bit longer, if the mail's slow, it's when that mail comes in to the auditor state's office and it gets processed here. We'll look at the date that it was received, and that is the date that it was received. So if it's like 2 weeks after because it got delayed in the mail, well, that's the receive date. So I would, if you're going to be mailing, I would, take measures to make sure that that gets to the auditor state office within the deadline, to the UAN address that we have in the year-end procedures, and gets processed. If you're going to be uploading, we're going to get to how to, check that on the internet, so that if something goes wrong with that you can resubmit it through the internet. Incomplete filings made on time are not complete, believe it or not. Well, what do I mean by incomplete filings? Well, the most common example is you did not add the notes, and you'd be surprised. We, just look straight ahead. We won't name any names, but there are a few folks who sometimes are in the habit of just, treating this as a game show, so to speak, and thinking they're going to win the prize if they get their year-end filing done in early January, ahead of everyone else for some reason. And so we'll get a submission that says, you have to attach some notes. So we've got some submissions with a handwritten note scanned in that says, I'll send you my notes later. And that does not qualify as a note. So if you send your notes in, 90 days, sometime in March, way past the deadline for filing, your filing was not complete when you sent it, say in early January, without the notes. Your notes are considered part of your annual financial reports, and you can't just separate that out, or the scheduled debt service, or any of those items that UAN cannot enforce you to enter in, that you have to take it upon yourself to enter it in when you submit. That needs to be part of the submission for it to be considered complete. So that's what we're getting at. All right, so if you're going to be e-filing, or even if you're not e-filing, if you're mailing it, technically you'll see on the messages, Alex may have mentioned that when you mail it, you should check back after 5 business days because of the manhandling and processing in mail. On the Auditor State's e-services website to confirm that we got it, wasn't a damaged disk or anything like that. For those of you who will be submitting through internet, it's a little bit less. We'll say 2 to 3 business days, so we're not counting holidays or weekends. Server's not running on those times. We're processing it. Now, it can go a lot faster. I would say check back. If you submit it through the internet in the morning, you could certainly check in the evening or afternoon, and most likely it will be, you can confirm the filing status that quickly. But we do allow for, when the internet submissions, for up to 3 business days, because occasionally we get 1,000 people submitting it all in one day, and that will definitely slow down the process on our servers. I cannot give you all the in and outs of, if you've never logged in to the e-services account. This is where you would check, the Hinkle system and several other features that the Auditor State has for you. It's not part of UAN's what we manage, but we do in the year-end procedures. There is, if you look at the table of contents, you'll find, meeting these requirements. We do give you some overall steps to logging in. Once you get to that e-services website, if you've never registered with that before, it gives you directions on the Auditor State's website on how to log in for the first time and verify your information to establish an account. And that's where you can check your filing status. So we also have a shortcut built into the software for you that will just open up the e-services website so you can check your filing status. All right, so once you confirm that, you can do the happy dance here like Bernie. It kind of looks like a younger version of Bernice. And that means, yes, it's been on time. You're not going to get any penalty. But until you confirm that, there's no happy dance for you completely. I mean, once you close a year, yeah, there's a lot of, fireworks, but it's not really complete submission, or it's not really done until you confirm your filing status, because something could go wrong with that when you submit by internet. It'll give you a confirmation when you submit by internet, but that's not 100%. We can't control. It's a secure file. No one can steal the information going through the internet, but it can fail somewhere between your computer, the internet, and the Auditor State servers. So it's not filed until you confirm it on the e-services account that the filing status is complete. All right, so a few other points here. The Hinkle system file will only contain documents required for the Hinkle system. So we get a few calls about this each year saying, hey, it didn't work because it's only showing me, this few reports, and it doesn't show everything in my year end. You send incomplete information to UAN, and the Hinkle system's only going on our e-service website. It's only going to show what's required for that filing system. Now, that does not mean that your auditors aren't going to get the information. As long as you've followed all the steps and the best practices, all that information is going to be in there for when a year later, 2 years later, when you're audited on that year, they're going to have all the documents they need, and they can pull that up on some special software they have provided by the Auditor State to look at all the reports that you have on your UAN software itself. All right, so once you get that confirmation on the e-services website that this filing status is good, then you should publish a notice in your local paper, however small or large that is. You're required by the Auditor State to publish that notice, and it could be just something stating, that the annual financial reports are ready and available to be viewed by anyone in your township or entity, and some contact information. I'm not sure if that just requires like an email address or phone number, but in the past it would be like the fiscal officer's phone number at the township or whatever. But you have to provide some contact information so a citizen could request to look at that information. I know that doesn't happen hardly ever in some townships and villages for sure, but that doesn't mean you're not required to do it. You just get the information out to the public, and if no one wants to look at it, that is not your part. Part is to get it out there. All right, now that you've got the confirmation, another thing that you can do is authorize UAN to submit that information to the Treasurer of State's Ohio checkbook. Now, the Ohio Treasurer of State has options for submitting transaction information monthly, and that's not something that UAN can provide. So if you're on a monthly plan with them to submit it that often, then well, that just wouldn't be through UAN. That'd be on your own. But since we have at year end, we have all your transactions, we can submit this on your behalf. But it's not an automatic thing. You have to. We're just going to a different agency, so you have to authorize this. There's a process, and you can find this. You can start in the year-end procedures, and the detailed notes are actually on the UAN website. It doesn't say on the slide, but it's on the UAN website under Resources. And if you look at the menu, the UAN website Resources, and then it'll just right there, Ohio Checkbook, and that gives you step-by-step instructions. There's really 3 steps to it. You authorize on that website that you want to UAN to do this for you with the data. We'll send you a confirmation. You respond to that confirmation saying, yes, yeah, indeed, I meant to do that. I want to authorize UAN to submit this on my behalf. And so those 2 steps are with UAN. And then the 3rd step is to go to the Ohio Checkbook website, and they'll get that information from you, and you have to confirm on their website that this is what accurate, that you did want to this submitted that way. So it's 3-step process. You want to send that, once you send that off of authorized UAN, you want to, don't forget step 3 is what I'm saying, because we spell it out for our end, but you've got that. And yeah, that seems like a lot. It's really not that bad. Just clicking a few buttons, responding to a few emails, and a lot easier than submitting this on your own, because UAN basically does all the work for you besides that authorization process. All right, so you'll want to print the year-end at this point. You can print your 2023 year-end reports. This is laid out in about 1.5 pages on pages 7 and 8. So in the middle of page 7 of the year-end best practices, there's a lot of reports to print year to date. So we spell that out for you, and all the way to halfway through page 8. Now in our scenario here with Buckeye Township and our examples, if you get to the second half of that, we've already gone through and completed the W-2s and the 1099s and some of this information already. But the rest of it, you are printing this or saving it to PDF format. I would do both for me, if it were me, for the not just the annual financial, like regulatory statements, but also all of these year-to-date reports and status reports that we have listed here. This is just kind of your long-term public records, and so that's important to do. As far as what's available, I think we had a question about this earlier that I don't know if it got answered. When you're publishing that notice, you're saying the annual, so if you file regulatory annual financial reports like most of our customers, you're going to want to have those statements available. That's what they're talking about. It's available to your public primarily, so they can come and take a look at those reports. And those are listed on how to get to that. It's listed on pages 7 and 8. We're moving on to page 8 and of the best practices. And well, no, we're not. We're still on page 7 or page 8. Yes, the middle of page 8. One thing, just we want to return to this. This only affects of all of our customers, like I said, less than 100. But I'm going to spend a little time on it just because it is new. Part of it is new this year. Suzanne already mentioned it this morning. So the 1095 and 1094, very few of you need to submit these forms for the IRS, but you want to make sure that, just don't assume that. I think your starting point should be the year-end procedures. Appendix 2 has quite a bit on reports. You just look at the table of contents. You can find what page it's on. And we have like a 1.5 page, less than 1.5 page write up to get you started, but it's mostly telling you where to find the information on the IRS website. If you were to call us or see us in any of UN reps in person, and you ask them, "Hey, do I qualify to submit this form?" You're just going to be prepared to get a blank stare from UAN representative because we have no idea. This is really you really need to review the IRS information and determine, and you go to start with their websites and see if, okay, just rule out that, yeah, you don't have to submit these forms like most, or maybe you do. So review the instructions for 1095 and 1098 forms to see if this is something that applies to you. Now, you can get to a starting point like that through the year-end procedures, like I said, but all that does is help you to look, get you to some links to check the IRS website to see if it's something that is relevant to you. Now, the same information can be found in the payroll manual, and you can get to that by going to payroll reports and statements, external forms, and then the 1099, 1094 forms. When that area opens, then the FAQ section down there is your starting point. So we'll give you the overview again in the FAQs, and if you have determined that, yeah, this is something I'm in that minority of folks that have to submit these forms, then you can, we'll give you how-to steps throughout. Before I go back, let me go backwards here a little bit. One other point I want to make about this is that it's not, I might have gone way too far. All right, so let's come back. Late in the day for me too, folks. So I'm getting click happy here. So one other thing I want to point is when I say step-by-step instructions, it's once you know what you need to fill out for these forms, we give you step-by-step instructions on how to fill that out in UAN. And so we don't spend a lot of time explaining all of, fill in 1A or 1B, and this is what it means, and you should do it, pick this if that applies to you. There's a little bit of that, but it's mostly how do you make that happen on our forms so that it'll print out on the 1094 accurately. So again, the IRS website is the IRS instructions on this forms are what's really important for you to get a handle on in this category. Now, new this year, and this is why I spent a little bit more time on it, and Suzanne mentioned already, is that you, especially if you're someone who qualifies this, you're probably going to be required for sure to file it online. And the IRS has added the AIR system, Affordable Care Act information system, so that you can file online. And I just want to re-emphasize that if you know you need to file these reports or these forms, then since this is new, the IRS has another transmittal control code, that TCC code, which code is redundant there. It's a transmittal control code that is specifically for the 1095, 1094. So you have to apply with the IRS on their AIR system going through the steps there to get that code. So no time like the present to start that process so that when it comes down to filing this, you can be ready. All right, so back to the software and relating to e-files, now we have an e-file button in the same area to enable you to complete those steps. And the e-file steps that we have that you'll have to follow in UAN to create those files, or actually files, will come right after all of the other steps. So you'll go through adding, editing, and printing the forms. Print out a copy for yourself. You're not mailing it. You're going to e-file. You still print it out, and then following that, we have steps for e-filing. So it's all in there, and it also explains somewhat what we know about the AIR system, IRS website. And of course, you'll find more information. I'll give you some links to that website. All right, and you'll want to check. I believe we're going to update our overview to the year-end in the 2024.1 version update on how long you have. I don't believe it's due like at January 31st, like most these other forms are for submitting. So you want to double check that with the IRS. Like I said, we'll publish that in the overview as well in the along with your year-end documents that you get with the version update. So our next topic at the very middle or end of page 8 in our best practices is verifying revenue budgets. And we're at the point that the title of this is after receiving your amended certificate. So after you receive your amended certificate, so you remember earlier we produced and sent the year-end balance certificate. So now your county auditor will use that and return to you the amended certificate. And you want to do a comparison as soon as you get that document. Before you do anything else, remember we've already added our revenue budgets for this year in the previous steps. So you'll want to go to Accounting Reports and Statements, Budgetary Reports, and open up this report. Under Budgetary, there's 2 reports in that list. And the first one is Resources Available for Appropriation. Well, Resources Available for Appropriation report is the most like your amended certificate, the closest the UAN has to your amended certificate. And you want to compare the total resources available. That'll be on the right-hand side of this report, the number on the right-hand side for each fund. That should match your total resources available on the amended certificate. If it does not, then there could be really 3 possibilities. Normally it should, but if it does not, it could be that either the county auditor made a mistake, simply that happens. So you would want to follow with them to make sure, hey, wait a minute, why is this off? It could be that you made a mistake, and if you kind of jumped ahead of our advice about the year-end certificate, and you submitted that before you made some adjustment that affected these changes in the year-end certificate or the revenue budget, then that could be a reason. The other reason is that some county auditors will look at your estimated revenue and make adjustments. They will not agree with the initial assessment that they certified and say, we're going to recertify this at a lower amount, or I guess if you're lucky in some cases at a higher amount. But if that is the case, if you contact them, they say, no, we did not certify it at whatever, $10,000 for that fund. We certify it at only, $8,000, whatever, or $80,000, whatever the case may be, 80 and 90. So if they certify a different amount, then you're going to have to do a revenue supplemental, apply as correction, and you want to be careful to do that just right so that it's reported properly on next year's annual financial reports. So you want to give a UAN a call if you need to correct your revenue budget because of changes on the first amended certificate. So that's the first thing to check when you get your amended certificate. So your amended certificate is very important. This is why I mentioned earlier that I can't think of a case why you'd want to do your permanent appropriations in mid or late December. Someone had asked earlier about that, because you really should not do them until your first amended certificate is certified by the county auditor, and that can't be done typically until they get your year-end balance certificate, see what your final end-of-year cash is, and then provide you with an amended certificate. Because your permanent appropriations are based on the total resources available for appropriation. You really don't, that hasn't been certified until you get the first amended certificate for the year back from the county auditor. So once you have that, you have until April 1st, or be adopted before April 1st, so the March 31st, you're required to be adopted by your board. So all the way up until that point. And so now certainly you can be working on drafts to your permanent appropriation well before you get that amended certificate back, but the final should be adopted after that amended certificate is received from your county auditor. And then you would enter that, once adopted by your board, then you would enter that into UAN under accounting, maintenance, appropriation budgets, and it's a replacement of your temporary appropriations. So you're not adding to the 3 months in your temporary appropriations. You're replacing the 3-month spending budget, appropriation budget, with a 12-month spending budget. So it's a replacement. So we select permanent appropriations, and hang on here. You select permanent appropriations, and my next slide's a little bit not working quite right, so I'm going to push it forward here to a good slide. So once you enter in your permanent appropriations, then you want to make sure that you want to print another report to do a comparison. So you have your board legislate, and you're going to prepare your permanent appropriations outside of UAN on a spreadsheet, a Word document, whatever works best for you, and have your board adopt that. When they're ready in a meeting, and then enter that into UAN as permanent appropriations, and then print this report, the comparison of budgeted and appropriated. That's under accounting reports and statements, budgetary reports. Excuse me. And that's the same area as we went for resources, just one of 2 reports. The second report is comparison of budgeted. And I'm showing you, this is kind of a wide 1-page report. And the last 3 columns, what I'm showing you on the screen right now, the first of the last 3 here is total estimated resources. And that's your resources available for appropriation that were on the resource available appropriation report. So that's the maximum that you should have, you're allowed to appropriate for the year based on your amended certificate. And then you've got what you entered in as your permanent appropriations. It'll list your final appropriations. You want to compare those numbers for each fund to your legislated grand total for each of those funds, and they should be identical. If it's not identical, that just means most likely you just typed it in wrong, or maybe there's something wrong on and most likely that's the case. So you want to investigate, and if you have to make a correction, again, UAN support staff will be happy to show you. Once you save a permanent appropriation, you just can't delete it and add it again. You would do a supplemental apply as correction. Again, call us to make sure that we can direct you on how to do that as apply as correction, so that it's reported properly on your annual financial reports for 2024. And so once those are all matched up, just want to point out the variance here represents on the right most column the resources that are still available to appropriate. And so that's just saying, yeah, sure, that's there's no statewide requirement saying you have to appropriate all of your resources on your reports. But understand what that's doing. It's saying, okay, you appropriate, you have this much in resources available to appropriate. Your board chose to appropriate all of it or most of it, or maybe 80%, whatever that case may be. And this is what's left over that you could potentially, if you get in a crunch, you could potentially increase. So there's different, that's a whole another topic on budgeting and how you might want to do that. That's beyond the scope here. But that's what that column means. What you should never see here, unless you're in a fiscal emergency or fiscal watch perhaps, is a negative number. It should be 0 or higher. 0 would mean you're kind of showing that you're going to spend all of it, or a positive variance means that you just are choosing not to appropriate that because you want some money to go into next year. All right, any questions? And then we're going to wrap it up with, you know what, I'll tell you what, I'm going to finish this last section and then we'll open it up again for questions because this is a really short piece here that I've been promising to a few people. All right, so now is the time you can remove old funds. We had a few questions about this. When can I remove them? We get a lot of questions about this in the middle of the year, and unfortunately by then it's usually too late to really do anything because you've already had some activity that is prohibiting you from removing those funds. So now is the perfect time to do that. You've closed the year and you're ready to move forward with your new year. No temporary mode anymore. So cleanup time. All right, there are prerequisites to removing an old fund. And so I'll go through that. The fund must have zero carryover balance from going into 2024 and have no transactions. So any activity with that fund is going to keep you from removing it. You can deactivate it, but you can't remove it. The fund cannot have any revenue or appropriation budget entries in the current year. The fund cannot be used in any 2024 created document. All right, so that would include, like I'd mentioned, the year-end balance certificate, and so that's our last point here. The fund needs to be removed from your year-end balance certificate if it was included, but it's not really a fund that is even relevant to your entity any longer. And that would be under, well, we just came from their budget transactions, and you would remove that. Now, you want to be careful because you want a record that you submitted the year-end balance certificate. So if you don't have a paper or PDF record of that certificate that you already submitted, then before you delete that, make sure you print or save a PDF of the year-end balance certificate, then delete it, and that kind of removes that record to open up the door, hopefully, for you to remove that. But there are further steps before you can remove that. If you have any revenue accounts that use that fund, whether active or inactive, you have to remove the revenue accounts and the appropriation accounts first. So you go to accounting, maintenance, revenue accounts, says here, change the status to all. Now that's going to show you everything. Another option you have that's not on the screen here is that you could change the status to removable. And that will show you all the revenue accounts that the software will allow you to remove. If there's something preventing you from removing it, it's not going to let you remove it. So change it to removable. Again, you might have some removable accounts that you don't want to get rid of for one reason or another unrelated to this. So be careful and select only the accounts you want to remove, and then you can remove them. And repeat the same idea for appropriations, accounting, maintenance, appropriation accounts, change the status to all or removable, and only select the accounts that appropriation accounts that you want to get rid of for this old fund, and hit remove, and that will remove them. And then we're at the end of the road. Last slide here. You can now finally remove that fund. Go to accounting, maintenance, funds, change the status to all or removable, and it will allow you to select that fund. If you've taken care of all those other prerequisites, select that fund and remove it from your UAN system. You can go on with a clean slate with that going forward. Well, it's been a journey and a wild day of games and activity, and I appreciate everyone's attention through some of the technical difficulties and everything today. We've had some really good questions, and we still have some time for questions. Looks like about 20, instead of 30 minutes, we have 20 minutes till 4 here, 23. So I'm going to open up the floor. I do want to mention, as we mentioned before, the Fiscal Integrity Act This does qualify. You just basically have to report the hours that you spent under construction, under the instruction. Right. If you left for 2 hours in the middle, we get this question a lot. Well, what if I had to leave for an appointment for 2 hours and I came back? Well, were you getting training during those 2 hours? No, you weren't. So you would, self-report the hours of training that you received for this day. And that's on you there to go to Auditor's Office, Training, Fiscal Integrity Act, log in. If you've never logged in there, the auditor has instructions, again, for establishing a login. And you can contact Auditor State if you want to talk to someone on the phone. UAN doesn't know anything about navigating this website. You would contact the Auditor State's office and ask to speak with a training representative, Auditor State training representative, about registering on the training portal. We thank you for your time, and you have a good rest of your day.